Okay, let's go ahead and start. Well, let me start with good morning, good afternoon, good evening, depending on which part of the world you're joining us from. Welcome to Peachscore's November 2024 Demo Day. My name is Payman Shamrzadi. I'm the COO and head of the Peachscore Accelerator. Today we have an amazing agenda for you. After a few more opening remarks by me, we'll have a great panel discussion on the future of innovation, AI's role in startup growth and investment strategies. We will then follow this up with our Q4 Partner and Startup Awards. And then we'll have our startup pitch sessions. We have an amazing group of 21 startups that'll be pitching their companies, and it's going to be a fantastic session. And then we'll close out the today's demo day. Okay, let's start. To begin with, I'd like to thank our amazing strategic partners that have been instrumental in our evolution since the beginning. Plug and Play in particular has been with us since the beginning of our company as our major shareholder. Plug and Play is known as the most active investor and accelerator in the world with 250 investments per year. It's incredible what they do. They were early stage investors in unicorns such as Google, PayPal, Dropbox, amongst 25 others. Our next amazing partner is Los Alamos National Lab. They are the leading U.S. national laboratory pioneering research in artificial intelligence, national security, plutonium, and more. And hopefully you guys saw the movie that came out this year. It was absolutely incredible. This was an allied effort that developed the world's first atomic weapons. Now, we're very excited to expand our partnership going into next year with the lab. As we're going to be jointly collaborating to support startups in key scientific areas. The National Lab provides non-dilutive grants for around a few $100,000 in different industries, and we really hope to see some of our cohort members join the program and take advantage of the wonderful work that they do. Next is our strategic partner, Loyola Marymount University, and their Fred Keisner Center of Entrepreneurship in particular. Now, in case you haven't heard, LMU is ranked among the top entrepreneurial centers in the US. They do absolutely amazing work with their students. Now, as part of our collaborations with LMU, all the graduates of our Accelerator program, once they graduate, their graduation certificates, they have the LMU signature endorsement, which is absolutely incredible. Now, thank you again to our great partners for your support and collaboration, as well as to the ones not listed here for your continuous support since our inception. Okay, let's talk about a little about our program, our portfolio. We started the Accelerator program aiming to support startups at scale globally, and we're well on our way in doing that. I'm really happy to announce that as of now, we have over 500 active startups across all of our cohorts. Combined, they have raised over $100 million of funding, and they join us from 54 countries from around the globe. It's absolutely astonishing to me to see the amazing amount of innovation that's happening around the globe, and it's been incredible. Now, we're also quite proud of the fact that our cohorts have a 25% diversity ratio with female and minority founders. Now, we strive to increase this to over 40% in the future. Now, through our program, our founders have watched over almost actually 8,000 hours of educational content and counting. So I'm sure it's going to be over that pretty soon. Now, this is content created from top executives and experts from investment, corporate, and government agencies. So absolutely incredible educational platform. Now, going to how our program is structured. Now, we build this program on four main pillars: enrichment, elevation, engagement, and empowerment. It is designed to support founders in a completely virtual format without requiring any equity or warrants, and it's almost free. It's an incredible amount of value it's been provided. This encompasses a 12-week data-driven accelerator program built on top of a proprietary technology combined with human expertise to provide a really unfair advantage to our portfolio companies in this dynamic market we're all dealing with. Now, through Peachscore, not only our founders benefit from the educational content that's available, but they can also leverage our technology and platform to benchmark their company against 600,000 other companies globally within the market. They receive business and market intelligence and even get access to $2 million in perks from service providers within the ecosystem. Now, our companies also have access to over 500 hours of group office hours and mentorships annually. The cohort members benefit from detailed pitch reviews, pitch deck reviews, in addition to live pitch practice sessions, webinar sessions, and even networking sessions each month. In addition, our alumni have a chance to secure up to $500,000 of investment from our angel group and extensive investor network. All right, now I'm super excited about this. As many of you know, strategic partnerships are a key factor in terms of building great businesses. I'm elated to announce that today we're officially launching our partnership with Dealum. Dealum is the world's largest angel investor community. They host over 25,000 members globally. This collaboration empowers us to support our founders like never before, guiding them from inception to growth. Through education, networking, and mentorship, and unparalleled fundraising opportunities, our partnership with Dealum will be unlocking resources and connections at scale that has never been achieved before. Keep an eye out for an official announcement, I believe today, for a lot more information on this partnership. Now, in addition to Dealum, I'd like to welcome our three new partners that we're currently in the process of completing the integration with, and they're also joining our strategic partnership circle. First, Ignite, a leader in go-to-market strategy and growth acceleration for B2B tech startups. They're known for the incredible events that they put together to bring investors and startups together in the Bay Area. In fact, they just had one of these events a few weeks ago, and hopefully some of you were able to attend that. In addition to Ignite, we have WeAreNoCode, which is an online institute for aspiring non-technical founders to launch their next venture using no-code tools and AI. Be sure to check out their YouTube channel. Last time I looked, I think they had over 170,000 or so subscribers with absolutely incredible content. We're also very excited about our partnership with Startup Stack to extend our founders' ability to scale their companies with support from service providers. Welcome to all of our new partners. We're really excited for the journey ahead. 2025 is going to be absolutely incredible. Okay, so now we have our amazing panel on the future of innovation and AI's role in startup growth and investment strategies. With that, let me introduce Alex Mojtahedi, founder and CEO of Peachscore, who will also be moderating our panel. Alex, hello.
Good morning. Good afternoon, everyone.
Good morning, and go for it.
Yeah, so good morning, good afternoon, everyone. I'm thrilled to welcome you to this exciting panel discussion on the future of innovation, AI's role in startup growth and investment strategies. Today, we are diving into how AI is reshaping the startup ecosystem from transforming growth strategies for startups to improving investment and processes. We choose this topic because AI, particularly generative AI, is transforming industries across the board, from customer support to Hollywood and from major retail brands to technology giants. However, its role in the startup ecosystem remains largely undefined, and conversations like this are crucial for exploring how founders, investors, and other stakeholders can effectively harness AI to shape and accelerate growth in this evolving landscape. We have an exceptional lineup of panelists today, each bringing a wealth of knowledge and unique perspective to this important topic. Before we begin our discussion, I would like to extend a warm welcome to our amazing panelists. Let's start with brief introductions. Please share a bit about your current activities and how you have been involved in the startup ecosystem. And it would be wonderful to learn how about your experiences and contribution to this dynamic field. So I would like to invite Sid Mohaseb, Seren, Bill, and Christian to join our conversation today. Hey, everyone. So how about we start with Seren? Seren, you want to go first?
Sure. It's a very big responsibility to be the first, but I'll do my best. Thank you, Alex, and thank you for inviting me to join the panel, as well as also regarding the announcement just earlier. Super excited to collaborate with the Accelerator program, so which we think is really, really important to give more access to people who have motivation and spark in their eyes and want to become a next best entrepreneur with their ideas. So thank you again. From my background, I've been in science, technology, entrepreneurship field for over 2 decades already. So I started in a science park and saw really closely how these kind of technology-intensive companies were built, saw their successes, their failures, and kind of got really drawn into the overall startup ecosystem, which was just so exciting and innovative and really making a change everywhere. So after working there for a while, I started my own startups. So I kind of went from support structure side to actually being the entrepreneur myself. And unfortunately, that one failed, as they do. But after that, I kind of got back to the support or the kind of fundraising side. So this is where I'm currently working at Dealum, which is their platform for early stage capital, and helping those startups and entrepreneurs and founders to fundraise. So kind of I have done almost all the full circle now, and hoping that with my kind of knowledge and background, I can make this fundraising and especially the early stage capital raising much more transparent, efficient, and effective for everyone.
Fantastic. So maybe on my screen, I see Christian next to you. So Christian, how about you go next?
Sure. Hey, everyone. Thanks for having me, first of all. Nice to meet everyone on the panel as well. And for everyone watching, Peachscore is awesome. I discovered Peachscore when I was the director of an accelerator program here in Los Angeles called Startup Boost, and built a relationship with Alex, and what they're doing for the ecosystem is just awesome. My background has been a little bit diverse. I basically 15 years ago decided that working in a nice job was not for me, at least for the long term. And then I kind of had this long-term vision of like being an entrepreneur. 3 startups, failures, and sales later. Here we are. I had actually built my first startup as a non-technical person, like I'm not a coder. And that's really what inspired me to build the company that I'm currently running, which is WeAreNoCode. It teaches people basically how to build MVPs and products, which was the biggest challenge I was seeing with no-code tools, and now with AI coding tools as well. And yeah, it's a super exciting time for generative AI, specifically in the space that I'm working in, which is more on the product side. And what else? Started a YouTube channel a couple years ago, and that has kind of exploded. It's been one of the biggest drivers in the business over the past 12 months. We went from 20K to 170K. A lot of work. It's not easy, but it's been really interesting to see how that has played a big part in our journey. I'm also launching another software business because I like pain. And yeah, so that's in the sales tech, leveraging AI. So yeah, excited to be here today and have this
Fantastic.
conversation with
Thank you
everyone.
so much for coming. Sid, you want to go next? You are the next on my screen.
Sure. I'm Sid, and I guess my claim to fame is that I've been around the table. I've started 5 or 6 companies, exited 3 or 4 of them, have been an investor for almost 30 years now. I was the president of Tech Coast Angels, which is the largest angel service entity in the United States. Probably have seen thousands and thousands. I used to see like 2,000-3,000 deals a year.
Wow.
So you can do the math. I did turnarounds for about 10 years. That's carving out businesses and buying businesses from the likes of DuPont and so forth and turning them around. I was a consultant, a partner of a consulting firm, helping really big companies, the likes of Motorola and IBM and Ford Motor and Toyota. They were all my clients at one point or another. One of the companies I sold to KPMG became what they now call the Lighthouse, which I understand does more than $250 million in revenue now with a couple of thousand people. And it is their data analytics shop, which started with us. as the core, the company that they purchased. I serve on a number of different boards, from AI responsibility and trustworthiness companies to various kind of analytics driven platforms and so forth. I teach at USC, both in the engineering school and in the business school, and I teach data-driven strategy and data analytics consulting. And I have a number of articles at HBR and London School of Economics about this topic of use of AI and use of analytics. My father, about 30 years ago, when I was studying at USC as well, said, "What is this operations research you're studying? What is it good for?" And I couldn't explain it. About 10, 20 years later, I said, "You see, it's now hot. It's called data science." So I'm happy that I was able to suffer through it until it's cool. Pleasure to be with you, Alex.
Thank you so much for coming, being with us today. Bill, I think you're the last.
Hi. Yes. Good morning, everybody. Good to meet you all. Bill Berry, CEO, founder of IgniteGTM. So we are at the core, we're go-to-market advisors. We do a host of different things, right? In the early stages, startups need a lot of resources, a lot of guidance. So not only go-to-market, we help with the fundraising aspects, but then also business development. We invest in VC funds through our fund of funds, right? So that's the second part of our business. And really we try to wrap it up and build our ecosystem through events. As Alex mentioned, we do a lot of events. Not that we want to be a pure play events company, but somehow we built this reputation that everybody likes our events. So we keep, we're trying to be a little bit more strategic in how we plan these out, because we do want to make sure that we open a lot of doors with the startups that we're working with. My background before this was 20 plus years in and around the data centers. So what we call the clouds now, networking, is really where I grew up from a technical standpoint, always working with early stages, always leading the go-to-market side of the house. And really the superpower I think that's been developed is being able to kind of approach these go-to-market challenges with a first principle lens, right? It's about that first pitch and how do we open up doors and get the first 10 customers to try the product, right? So that's kind of our specialty. We're happy to be partnering with Peachscore on the ecosystem front, because we can't do it alone. It does take a village, it does take a tribe, and we're really happy to be part of this one.
Thank you so much for being here today, Bill. So to kick things off, let me start with this question. So how do you see AI transforming the startup landscape today? Where do you think it can have the most immediate impact? Feel free to share your perspective either as an investor, entrepreneur, or both, as I'm sure you have been different part of the ecosystem over the course of your career. And we can start again from Seren, from top. If you want to start, Seren.
Sure. I mean, if we look at what are kind of the main pain points in that capital raising is, of course, making those matches between the founders and the investors, the projects and the capital. And I think that's one of the things where, of course, obviously, the AI is going to help to make more accurate predictions, matching, to really dig deep into what is the investment thesis of that specific investor and find appropriate matches from the pool of deals. So we did just recently some data analysis on the applications on our platform, and from our statistics, out of 100 applications, only 6 get any attention from investors, and only 2 get funded. So you can imagine how big is the pool of deal flow or the volume of deal flow that the investors need to go through. And of course, in that case, you tend to kind of screen super quickly because there's just so many of them, right, and you might miss opportunities, and you also tend to kind of apply your bias a bit when you do that really quick screening. So we think that from our side, AI really can help overcome that bias and notice the opportunities that otherwise would be just buried under the volume. So I think that's kind of one of the main things that that allows investors to spot opportunities, not just kind of from the screening perspective, but also allows to monitor the progress of the startups potentially, and to spot just the right time when the exciting stuff starts to happen, and be there with their capital to boost it. So I think those kind of those could really add value to the ecosystem.
Yeah, completely right. Especially because you have been in this ecosystem and seen a lot of data behind the scene that no one knows, like how does it work. But working with a lot of angel groups and investors, I'm sure that you have seen a lot of challenges that hopefully can address by new advanced technologies. I would love Christian, now if you have any thoughts to share, with us today.
Yeah, I mean, I'll start off by saying that what Seren said is absolutely true. I remember going through thousands of applications, and it was like, if you just, are a little tired for one of those hours when you're reviewing the first round, it's like you'll miss out on potentially one great deal. And that's all it takes really with investors, right? So I definitely think that's a front. But I'm kind of going to come from the perspective of the entrepreneur, and kind of from my own experience. Like back in the day, you needed a village to build a startup. And I've been seeing, I started seeing this movement happen when, open source happened in coding. Then to a level even further when sort of no-code tools allowed you to kind of like build, apps without coding. And now I'm seeing this with sort of AI coding platforms. So, starting with platforms like Cursor, but now Replit, this other platform is released. They're basically a deployment platform. They've released like full-on, code your app with AI. And now there's even platforms like Bolt that are just completely blowing, like don't even go and look up this platform. You're going to waste 3 days if you do, because you're like, I'm a coder now. And of course, you need to understand the fundamentals of code behind a lot of what you're doing regardless. But basically, the barrier to entry with generative AI is incredible. Then I see the sales. So it's like build the product, which has always been a huge pain for entrepreneurs. A lot of that now is very accessible to people, especially people who are not technical. And that's 99.7% of the world. Then we have like sales, and like there are all these AI go-to-market tools, that allow you to do honestly crazy things as a one person. Then design, Figma just released their AI to be able to generate designs. Canva is going really hard on AI. I mean, AI basically is just going to start living behind everything when it comes to building startups. And so learning the right tools is becoming important, right? In a world especially where, like, let's face it, most founders will not get funding, and most investors are expecting them to generate revenue, meaning that the burden of go out there, test and validate, then build the first product, then go out there and get sales, and then actually have a first channel that's starting to regularly get sales. That's all on the founder. So I'm seeing kind of this gap that's starting to happen. I think that AI is I'm still completely for investors and all of that. I'm not against it in any way, shape, or form. But basically, we have to go further as entrepreneurs. We have the capacity to do so. And right now, there's this huge opportunity, which is kind of I remember thinking 15 years ago when I started my entrepreneurial career in SaaS, oh man, I wish I had learned how to code. And now it's I'm a kid in a candy store. I get to talk about all these cool tools on YouTube. And it's the bigger problem is almost, how do you not spend all day playing around with 1,000 tools? How do you figure out which ones are the right ones for you? So I think AI is just gonna not even be talked about as AI in a couple of years, simply because it really is behind everything. And we're just not gonna be pitching startups as AI, this, that, the other. It's just gonna be yeah, naturally you're gonna have AI in the background of most things in your company.
Yeah, completely. All your points make sense, and it's already happening in many platforms. Sid, you are next. Would love to hear your thoughts.
Sure. So I think it might help if we divide things up a little bit. One is AI startups and productivity. Like, how do we code faster? How do we do this thing faster? How do we sell faster? How do we do accounting faster? How do we... that's one component. The other is AI being embedded in what they do. That is, they're an AI company. They have something, and the fact that you use a productivity tool doesn't necessarily make you a company that's generating valuable AI capabilities. The first part, I think, is quite clear. It can enhance productivity quite a bit at different levels. You can move faster, you can code faster, you could do a lot with less people. It's a productivity capability. The second is now an absolutely confusing, nonsensical. I reminded of year 2000. Some of you are pretty young. I was then even investing. That's 20 some odd years ago, when the internet was boosting, and everybody who had a site was a .com. Oh, this is a .com company, and it was crazy. It was crazy, and a lot of investors who are my age or who are seasoned are looking at the world from that filter. They say, hey, hold on one second. I've seen this movie before and I've lost money and this is nonsensical. Show me, show me, show me. So you see a lot of noise in the market. Everybody, I mean, I was listening to the radio the other day, and this guy says, "We are the first carpet cleaning company powered by AI." Heck, well, it's just crazy. So what that does, it's not just helping you lose, helping the investors lose focus. It's also helping the people who are the customers lose trust. It's just confusing. So the problem there is people are the entrepreneurs are losing the focus on what value they're driving to the customer, and focusing on this labeling of AI this and AI that. And let me be a voice of reason. Investors may be dumb, but we're not that dumb. So we start backing off and say, oh, okay, show me. I don't trust them. So not only you're hurting yourself because you're not focusing on the actual value delivered and what people would buy. You're wasting time in raising capital. The third view is if we look at it from an investor perspective, an investment raising capital perspective. Selling equity is just like selling a product. There's no difference. You're just selling a piece of your company. It's the same thing. So you're raising capital, that means you're in the sales business. A sales business requires targeting, requires marketing, requires positioning, requires a funnel, requires all of that stuff that is in selling anything, from water bottles to computers to whatever. You're just selling equity. Can sales tools be useful? Absolutely. Can those who are powered by AI and somehow another? Yeah. But there's again a lot of noise there in terms of, okay, if I go to LinkedIn and put 3 keywords and boom, I have this list of wonderful things. It doesn't work that way. So still the art of finding the right chemistry between the investors, the right of mixture, the right of success factor, all of those stuff makes sense. Can you be more smart in targeting? Yes, you can. Lastly, it's the view of the investors, which we've been talking about, and Seren started with it in terms of, can we find a deal from an investor perspective? Again, we are a buyer, as in a way. So if the entrepreneur, the company is selling their equity, the investors are buying that equity and they want to buy the best deal. If I'm in the real estate business, I want to find the best property. If I'm in the whatever I'm in. So if there are tools that increases the probability of my success, you bet that I'm going to go there. but it has to reasonably increase my probability of success. And so let me give you a plug, because I've known Alex from the days that it was on a piece of paper, and I can claim that I had something to shape his mind or contaminate his mind in this thing. Is being able to actually score, being able to actually see the various dimensions of a company is significant, and it provides not only just a measurement of how well I'm doing, but a measurement of where I can improve. Everybody says focus on your strength. That's it's great, but you already have the strength. You need to identify the weaknesses, and either you partner up with somebody to do that. You identify some resources to hire. Figure out what doesn't work, because the investors are
Right.
looking at the weakness.
No.
So if you divide it up that way, you could see that there's lots of opportunity in productivity, lots of confusion in introducing in the companies, lots of opportunity in selling equity if you're an entrepreneur, and from the flip side, quite a bit of opportunities in identifying if a deal is worth pursuing. I haven't seen any investor, and I don't think I would, but I haven't taken one of these driverless cars either. So call me old-fashioned. I don't believe that we are close into pushing the button and identifying a deal that says, okay, that's the one to go to. But I am a believer in data and analytics. I teach it. I've had companies about it. So
Right.
I am a full believer in using analytics in terms of increasing the probability of success.
Thank you so much, Sid. Bill?
Yeah, a really good feedback. I think I nod my head with everybody, what you guys are saying. A kind of a fresh take, I think, from our side, the immediate impact that AI has in the space is that the first conversations are a lot better, a lot cleaner, right? If somebody shows up with a plan and outline, and they hand wrote it, and you could tell they didn't even use any kind of AI, and there's misspelling, but that's a bad thing. Like you gotta, that's kind of like the new standard. You got to show up with your homework really, really clean. The pitfalls of kind of the AI, there's two. One is Christian was mentioning this, like, hey, like you can kind of just get into this rabbit hole and you start building, and what about this? What about that? And you're like, now you're a craftsman, but then I heard somewhere, I was like, the art part is knowing when to stop and really kind of understanding, okay, this is enough for an MVP, and this is the problem that I'm trying to solve, right? I think there's a lot more other thing. There's we're on moving land. That's the challenge for both sides, the startups and the investors. Meaning innovation's happening so fast, right? A year ago, we were so excited about GPT wrappers, and then GPT 4.0 came in, and all of a sudden that whole category got wiped out. So now what, right? And I think that gives investors are a little bit more gun shy, going like, okay, is this going to last? Is there permanence? And then, like, through our conversations with a lot of investors, feels like the focus is going two ways. One is on the infrastructure side, is that's what space that we play in. The picks and shovels. How do we make the next great big bottlenecks are going to be data center and energy and things around that? How do we make that better? The other category is applied AI. But in that applied AI, we better see some really significant impact, business outcomes that comes out of it, right? So for founders, I would recommend just making sure that you're always looking at what is the problem you're trying to solve. If you're going to be a carpet company, then be a really good carpet company. Don't do this carpet company with AI, like Sid mentioned, right? So, but yeah, so keeping, even though with all these great technology and tools, keeping your head straight of like, you're here to solve a problem, you're here to build a really good business, and investors are supposed to help you along the way. Keep that in mind as you kind of navigate through all these cool tools.
Amazing. Thank you so much for everyone for sharing their thoughts. So now let's talk about the role of AI in reducing cost. For startups in their earliest stages, every dollar and minute count, right? As everyone knows, like the cost of running the company and building a product has significantly decreased over the course of many years. If you look at the stats from the last 10 years, starting a new business, which used to cost on average between $50K to $250,000 for most industries, and require a larger in-house team, now has been reduced to $25,000 for most industries, right? Most industry sectors, because we have maybe hardware or biotech that costs more, but I'm talking about in general. So the question is, how do you think AI can reduce cost and improve operational efficiency for startups during these crucial phases? And by the way, this can also apply to investors, because look, everyone want to save costs, and the question is how AI can save costs for all these stakeholders within the startup ecosystem. So I would love to start again from Seren. Feel free to share your thoughts. Yeah, let's start. Take it from here.
Thank you. I mean, but I think Christian already mentioned that it's an excellent opportunity to bridge the gaps. So is it the skills gaps that you have in the team? Is it the knowledge gaps? Anything? So it's very cost efficient compared to actually taking the long road and hiring more teams. So there are lots of things that you can. The productivity, which Sid mentioned, is much increased with the tools. Now, also maybe I'm also really liking the data aspect of what AI can do with the data, or how we can mine the insights very efficiently compared to maybe human hours and the effort you would need to put into it. So for startups as well, just go. It's both investors and startups really to analyze those big data sets that they have at hand. Also benchmarking against competitors or other investment opportunities, back tracking to your the rejected deals that you did before for investors, or what other startups have done and failed or succeeded. So kind of analyzing those like big sets of data really give you the insights to learn super quickly, not only from your own, but also from others' failures and successes. So so there is lots to do with it. And I think this kind of it really overarches all the aspects of the startup or any business, if it's in the startup or the investor scene. So yeah, that's kind of probably my 2 cents on this topic, which very much echoes what already Sid said. But
Fantastic.
Yeah.
Thank you, Christian. You want to go next?
Yeah, sure. Yeah, I mean, I think a lot of people lose track of the core goal. I think Sid said it best. He's like, people lose track of like, hey, how are you driving value, right? And so if we're talking about like cost reduction, let's talk about like where are the costs, or how could we, there's kind of 2 things, right? It's either you make someone more productive. If we're talking about human capital, like how do you make that person more productive? Or how do you, allow that person to produce more? I guess those are kind of the same things, but I guess there's some tools that, for example, like you could build you could use a tool that allows the same salesperson to take on 10 times more deals with the same amount of effort. So that could be one. Another one might be just, oh, this person no longer has to take things off of their plate. So this person no longer has to do this other thing because that's already happening. And yeah, so I think that kind of like starting off by figuring out what are the main costs, and then trying to tie those real costs that you're actually having with like, okay, what are solutions that we could have? Great. And then let's talk about tools that we could use to solve that. Because if not, you're kind of like, oh, these things can make me so much more productive. There's this, these 10 different tools, and then it just ends up being playing around with a bunch of tools again. Or taking on more work. It's like, oh, I can easily do video editing, and now I'm going to start a YouTube channel. It's like, no. Let's figure out the real use cases and I think this is the problem that we have for the most part all the time. And one of the things that we help people a lot with is like, it's about knowing when to stop, as Bill said. Like, what is that MVP? What does it look like? Instead of us talking about like, I have this vision, I want to build this huge thing. Everyone comes with a vision, great. The problem is that people don't come with like, what's the first step to that vision? What is the product that delivers the core of the value that we can build with the least amount of resources? Because if that core of value doesn't get them over the pay line, you might as well scrap the whole thing and figure out a new product or a new customer to go after with that product. And so I think people kind of forget the first principles, like the bigger concepts. It's like, If you don't know, for example, if you don't have a customer and a specific problem, and you don't have an MVP that solves that problem, you're really, you still, you got to figure that out. Like, if you have all those things, but you don't yet have the business model, there's like 4 big pieces, especially in the early stage, that if you don't get right, you don't get anything after that right. If you don't have product market fit, it's great to go to market and to be the best salesman in the world, but that's going to be very expensive sales cycles. That's going to mean like a lot of friction to market. Like, if you're going after 2 different customers, like your landing page says one thing over another, that means, a quarter of the conversion or 4 times the conversion, just because you've understood the fundamentals. And so, I think cost reduction, we can talk about every phase of a business, but really let's figure out like what are the top #1 priorities we should be looking at right now. Bill helps people in go-to-market strategy. Like, that's something that people have to be super good at, especially at a specific phase in their startup. But if someone goes to Bill and they don't even know who they're targeting, or they're like, oh, we targeted like 3 or 4 different types of customers, and it's like, it's going to be a lot tougher for Bill to be able to help you to get to create that growth engine in your business. And so, I don't know. I always look from the perspective of the early stage. I think that each individual in any organization, like, I think everyone in the world right now should be looking at what they do specifically. And if you're a manager, you want to maybe do this with each one of your employees and be like, where are you spending a lot of your time right now? What is the most difficult thing? And then to figure out and to try to pair them with just one tool. What's one tool that would already get them to be 10% more effective? Start there. Don't start by saying, we're going to bring lots of AI into our company. So that's kind of the way I think about it. I think people try to just like, they get excited, they get lost, they play around a bunch of stuff, and then they don't actually implement anything properly. So yeah, that's thoughts.
So you called Bill's name. So how about Bill? You go next.
Yeah, good points. So they were talking about the how this is streamline efficiencies, right, internally. It's very easy, like, to get these tools right now. You can do no-code tools, and you can start building things, and you build something called a Rube Goldberg machine. If you guys Google that, RUBE Goldberg machine, it's just it's been a term that just basically says you build a complex system, a robot, to do simple things. You know what I mean? So people usually do comics about it. It's been around for a while, right? So AI, you have the risk of building just Rube Goldberg machines that just go nowhere. And like, I don't know, do you think an investor will invest in it? Which is probably the wrong question. I think if you're already kind of building that and you're asking that question, you're kind of on the wrong path, right? For us, obviously we want to streamline the efficiencies, but what I'm finding is that the things that we build that stick is the ones that we viscerally felt the pain of doing manually, right? You have to know how hard it is. Like Christian mentioned, like, you do this thing so you can have one salesperson do the work of 10. Well, have you made 10 sales by hand? Like the actual onboarding, right? And if you don't know that viscerally, then don't build that machine yet, because you will just be ending up building a Rube Goldberg machine, right? So feel the pain, and then build the solution to solve it. And remember, it's the outcome and the output that matters, not the input. Nobody cares how many hours you spent in this. Did it work, and how many hours did you save doing it, right? And from a product market fit, one of the things that we work with our startups to say, hey, like, if you built this correctly, there's this magical thing that happens in the universe. You feel a vacuum, a pull of just like, holy shit, it works. And all of a sudden somebody wants it, and then 2 people want it, right? And then so keep building until you feel that pull, because then you might have something. So hopefully that helps.
Yeah, thank you so much for sharing your thoughts. What about you, Sid?
I guess I'm the old guy on the panel here, who has been through stuff from. I remember in the 80s, there was this thing we called the process reengineering. And I made a lot of money out of that because I was a consultant back then, and did that for a lot of companies. And the idea was, hey, take the fat out. Let's look at the processes. Let's improve it. 10 years ago, 15 years ago, they started calling it RPA. Same thing. And the fact is, as long as, from the days of the Chinese Silk Road, there are three things in any business. It doesn't matter if it's startup or if it's IBM or Microsoft or Mr. Musk's businesses. There are three things. There's the zone of growth, there's the zone of risk, and then there's the zone of efficiency. These things are balancing out. I can get really, really efficient and put the company at risk, fire everybody. I can go, let's go sell, and compromise on the quality, put the company at risk. So the risk is kind of in between. If we're talking about cost cutting, we're talking about basically the efficiency part, but it bleeds into the other parts in terms of what you're doing. The problem now is, okay, so we use calculators 40 years ago to improve how we do things or calculate things. Before that wasn't there. It's not the issue of the tool, it's the issue of the purpose. And what I see a lot is this chasing the shiny new object that, smart people, who are smart, oh, this one is better. Oh, this one is better. This one hasn't been cooked. They change it to a different system and then, oh, this one is much better. Let me change it. So they never get to the efficiency part and they never get to their managing risk. They're just creating risk by chasing this. This is better. And guess what? We're in the AI movement thing. Every day there's something better. So if you want to chase stuff, you would lose the productivity that you intended to start off with.
That's true. Yeah.
So stop chasing things. Yes, there will be something better. Just use this one, get the damn efficiency out of it, and it's not going to be 2 weeks after you use it. You got to let things sit.
Completely right. Thank you so much. And our team reminded me I have only 10 more minutes max, and so I have to cut the questions. But definitely, I would love to just before we end the panel to ask you to maybe after this demo day, maybe another day we can continue this conversation because I still have a lot of questions for every. For all of you. But let me just talk about like a little bit, talk about the risk and AI. So in general, investing in early stage companies involves significantly more risk compared to other asset classes. More risk, more reward, right? So, and especially in today's economic climate, where the banks offer a 5% interest rate for savings. In US at least, alternative investments such as like real estate, gold, or even Bitcoin now are more often seen as a safer kind of like options. And statistics, I mean, if you look at the stats, it shows that a lot of early stage investors they from mid 2022 they moved and shifted towards late stage startup investment, as these tends to carry a lower risk of loss, right? So given this context, how do you think AI and automation can help mitigate risk for early stage investors, those that are still investing in this space, and in today's fast-paced and unpredictable market? And on the other hand, it would be very valuable to discuss how startup founders can leverage AI to reduce risk in their operations. So it's both sides of the market, like either light side or dark side, either you're startup or investors. How do you think data-driven approach, AI, automation can really help these different stakeholders within the ecosystem? We can start from Seren again.
Sure. From investors' perspective, of course, speed of investment and being there at the right time and being attractive investment for the startups is that there's also competition on the early stage capital field on the investor side. So everybody wants to get close to the good deal as soon as possible. And it's not only angels who invest, but it's also early stage VCs and whatnot. So from angels specifically, I think their speed to investment or this kind of processing speed is super important to be reduced. And I think there is the opportunity for AI to really help somewhat to reduce the due diligence length. And from the other perspective, for the for how to kind of bring back that early stage capital to startups is having the ability to monitor and detect this kind of red flags when you have already invested. So kind of chasing the patterns, for example, when startup doesn't send in reports anymore, or having those kind of indicators when somebody, the big AI agent, will tell you that there is something going on. Please take a look closer to that. So they can jump in, they can help, they can provide their knowledge, their networks, any assistance to get startup out of that bad place. But when you have a really big portfolio, it's really difficult to track each and every single company in such detail and depth. So someone doing that for you and flagging the potential risks and problems would be really helpful, and also decrease the risk of failure for that startup. For startups, I kind of wanted to also kind of take a moment to also say that whenever you're using any AI tools as kind of building value on top of it, not just as a vanity thing that you can put on your website and a banner AI, but also to add value, then you always have lots of risk elements there which need to be considered, which is the cost, the kind of malicious cost pumping. So everything costs for you. So if you have someone building, a script that pushes the button way too many times and you get the bill afterwards, all those things need to be considered. And of course, the data integrity and security as well. So if you're using some shared models or the big models, then how do you protect the data that the customer has given you? So there's lots of risks that need to be considered there and mitigated in a way. So just being mindful of how you implement your AI features or added value is really, really important and should be kind of taken seriously.
Yeah, amazing thoughts. And Christian, you want to go next?
Sure. So I think, I'll break it down into 2 categories. I'll just have a quick line for investors. If you want to reduce your risk investing in AI startups, know what you're investing in. For example, if you're investing in something that is using AI, probably that AI will continue to get better, and so will the features that they're using inside of their app. Great. But I would focus a little bit more on figuring out how likely are the people developing the core AI to kind of want to eat that sector. But I think that just focusing on like traction for those kind of startups, like how well are they delivering value for their end customer? Then how likely is it that the underlying like tech features are one day wanting to take it over? So for example, we're seeing some of these big LLMs like Anthropic starting to, you can code within Claude now. So there's stuff like that where it's like, okay, that might be a sector that's a little bit at risk over time, a little bit, maybe a lot of it, but invest in traction. Just know it's like all about the value to the customer. Invest in their traction. That's a proof of how well they might do. And as the tech improves, just make sure there's not too much of a risk on that front. And then if you're investing in AI and like you might just be investing in the deep tech, great. The deep tech is kind of it's the same thing as biotech. If there's a big breakthrough and this person invents the new like LLM for a very specific use case, then that will have huge amount of upside and value. And these are the kind of projects that require actually a lot of like upfront money, right? It's the same concept as like, before you needed investors because like I remember building like a live streaming platform. There wasn't just an SDK that you could use to like, oh, now we're doing live streaming too. It's like you had to build this from the ground up, and that cost a lot of money. And I think right now it's like either invest in traction or invest in the actual deep tech. I think for entrepreneurs, it's like the risk is you can reduce the risk. So let's say you're an early stage entrepreneur. Reducing the risk for me is like, how can we, I have an idea. Great. How can we go from that phase to, deploying maybe $5,000 to $10,000 instead of what I see over and over again, like hundreds of thousands of dollars, 2-3 years of a person's life put into something. So it's a huge amount of risk. The goal here is like, how can I invest maybe $5,000 to $10,000 into building my startup, I think the biggest thing for the early stage is like, learn how to be a little bit of a generalist just to get things off the ground, because it likely, if you're an entrepreneur, it's likely not going to be the last idea. In fact, you'll probably have another 10. And if you're always having to, depend on other people for the very early stage, then you're a bit in trouble. Whereas if you pull off that very first step yourself, it's going to give a lot of confidence to bring in the teams that are better at you at all the things that you don't want to actually be doing in the longer term. So it's just like, learn the basics about building, learn the basics about selling, and over a 10, 15, 20-year period, that's gonna be reducing the risk. AI tools just happen to be good for that, but the biggest risk for anyone with these AI tools is just like exactly what Sid said, losing track of the goal. Like, we're using a tool for a goal. If you don't reach the goal, don't use the tool. And so my advice is, don't watch my YouTube channel, because you might just find tools that are going to be exciting, and that excitement might play against you. Instead, it's like, maybe watch the videos, but don't jump into every next tool that improves. Because as Sid said, we're going to see a better iteration of every single product today in less than a year. I guarantee it. And that's scary, but it's also like, it's okay. It's like, don't spend 6 months choosing your CRM if 90% of CRMs do the same thing. And I think that's kind of like the goal. It's like, just figure out the core sets of tools that make you dangerous enough, and stop looking at tools. Stop watching my YouTube channel, please.
Completely.
I think that's the biggest risk I see for entrepreneurs.
What are your thoughts, Sid?
I think we've got about a minute. I just say one word: focus on value. The rest of it is just means to an end. Means to an end. Focus on what value you have a business. Focus on tools and stuff, and you're confusing yourself and probably getting yourself away from the end goal. Bill?
Thank you so much, Bill.
Yeah, on de-risking, like I mentioned before, the first conversations are a lot better now, right? Because there's so many tools to be able to kind of articulate your thought. So I think there's more tools coming. I mean, just even Peachscore, right? Like, the startup having a Peachscore has so much more visibility as far as what they've done, what they know, what they don't know. So know that those tools are going to keep on getting better. So startups, you got to do your homework. You can't just say the GTM strategy is a black box and I need 300K for that for the next year. Like, you're gonna have to be able to articulate, what does that mean? How do you solve the cold start problem, right? And those are going to be, like, I think, better conversations for both sides. And then, and I echo everybody else's thoughts. It's like, it's a means to the end. Focus on the value. Don't build a Rube Goldberg machine.
Fantastic.
Solve some things. So.
Thank you so much. Yeah, all you guys, everyone have amazing points for this topic. But I still have so many questions like to explore, like the role of AI in education, collaboration, due diligence. But unfortunately, time is limited. Otherwise, we could easily spend hours discussing these topics. I will follow up separately, so hopefully we can schedule a separate maybe session in the coming months or weeks to continue this conversation. But to wrap up, I would love each of you to share your final thoughts. Any advice, any suggestion, AI or outside the AI, domain, and with our audience, and one prediction that is what is going to happen in the next 10 years in AI in any different industries. We don't keep you accountable for that prediction. We don't come back in 10 years, but we would love to just you finish your thoughts with one prediction along with your final thoughts about this panel. Seren, you want to go first? Or you can go second if you want. If you don't want
me to go first, Alex? I'll go first.
You go first, Sid. So
I'll go first. I'll go first.
Yeah, go first.
In 20 years, nobody would use the word AI because nobody uses calculators or other stuff that we use. It's just a fascination to scare people to. It's part of life, productivity. We have conveyor belts. We don't talk about conveyor belts. When the Industrial Revolution was, everybody was talking about conveyor belts. It's irrelevant. So in 10, 20 years, it's part of life. There would be something else, we'll call it super AI. IA, whatever, some other fantastic, capital letter, 3 words of capital letters or so. So that's the prediction. And I'll say what my value. Remember, this is critical. And over 40 some odd years of experience, we don't sell, they buy. We don't sell, they buy. You don't have, none of us, as good as a salesman we could be, we don't have control over the decision of the revenue. The person who writes the check, reaches into his pocket and gives you money, has 100% of that decision, 100%. And they have their reasons, and they buy because of those reasons. You find out those reasons, you have a business. You try to just sell what you have, you don't have a business. They make the decision, respect that decision, deliver the value that they deserve and they like, and you have a business. It'll grow.
Fantastic. Thank you so much, Sid. Christian, you want to go next?
Oh, predictions, man. I'll give you a bunch. You can keep me accountable to them. I'm fine with that. If I'm right, I'll call myself a genius. If I'm wrong, I'll say we had no clue in those days. Yeah, I mean, for me, I think there's going to be a huge shift for high performers who realize that there's going to be a lot more self-employment, let's put it that way. A lot more people building on their own 5 to 10 million businesses, dollar businesses a year, with maybe 2 people and a couple of freelancers. Just because I think that there's frankly a lot of incredibly talented people in the workforce right now who are feeling a little capped. And so I think that with the help of some of these tools and with accessibility to being your own entrepreneur, I think there's going to be a huge shift of people moving away from kind of traditional, especially for people who are in high-paying positions, 100K plus, where it's like, you're giving your life to your job. It's not like you work like 8 hours a day. No, you're working like 12, 14, sometimes more hours a day. And so I think that there's going to be a big shift with regard to that, with AI coming in. I also think, as Sid said, we're not going to be talking about AI in 5 years. No, 10 years maybe. I think that no code and coding will be all AI based within the next 7 years. We will still have, like, I would be very scared right now. I would learn the tools right now if I was like a junior dev, because the jobs of junior devs are definitely changing. I think everyone's job as they see it today is going to be required for them to know how to do their job with a tool. So,
Yeah.
and that's an opportunity if we take advantage of it right now. It's kind of a threat if you're the guy who, is still putting Excel on their curriculum. We need to kind of adapt to this new world. Apart from that, I think we're all going to live in flying cars, and they're going to be autonomous.
Very good point. Bill, you want to go next?
Yeah. So if the game is, we're skating where the puck is going, right? That's the common phrase. The puck is pivoting exponentially faster now. So parting words is keep looking at the market, keep looking for the value, keep looking for that problem that you're trying to solve. Prediction, I think in general, AI is super cool and it will take us to the next, stage of our evolution, but we are moving fast, and we will have, prediction is we will be touching our Oppenheimer moment in the next 10 years, and where everybody's gonna have to stop and go, uh-oh, we got to do something different, right? It's scary, but I think it's just gonna be, it's almost imminent. Like, it's just a natural part of this arms race that we're also feverishly on. It's gonna happen. So.
Yeah, a very good point. And Seren, you want to go? You're the last one.
Yes, I think from my side, probably more like advice for startup, for founders or entrepreneurs is really to think big, even if the capability of the AI is not yet there, then it's really developing so fast that now it's time to have the big thoughts, and the AI will probably follow soon, because a year ago we didn't have it doing the things that it already does. So if you have those thoughts and you have prepared for it, then you will be faster on the market in general. But as predictions, I'm not sure if it's a prediction. It's just like natural human behavior, is that we will probably see really going to the extreme with automation, let's send automated reach out to investors, and the investors have their bots responding back to the startup bots who are looking for fundraising. So it's bot to bot, and then everything is automated, everything is super efficient, and the human element is a bit lost. But hopefully probably faster than 10 years, we will find that balance between that super efficiency and the humanity.
Yeah.
So to have that element of building relationships with people rather than having a bot-to-bot conversation and then making decisions based on that.
A very good point. Yeah, it's already happening. People downloading building their own bots, agents to talk to other people. But amazing points. Thank you so much, everyone, and big thank you to all our panelists for sharing their valuable insights, and to our audience for their thoughtful engagement. Now, as I know everyone is eagerly waiting for our incredible startups to pitch their companies, I will hand over the stage to Payman to kick off the exciting part. Thank you so much, everyone. Thanks, Seren. Thanks, Christian, Bill, and Sid.
Thank you, Alex. What an amazing session. Absolutely incredible conversation. We definitely need to have the follow-on. Absolutely incredible. Thank you so much, all you folks. Okay, before we do the pitch session, we got some really fun stuff to do here. So we have our award ceremony. So let me share my screen here. And so we're going to first do our partner award. Let me say it's an absolute privilege this year that we're going to award our partner award to Los Alamos National Laboratory. And where's my screen? There it is. And there we go. Hopefully, there we go. Okay. And as I mentioned earlier in the opening, Los Alamos National Lab is an institution absolutely synonymous with groundbreaking innovation and global impact. From its foundational role in the Manhattan Project and the Oppenheimer that Bill just mentioned as well, Dr. Oppenheimer, to its modern day advancements in artificial intelligence, biotech, national security, this national lab has remained at the forefront of solving humanity's greatest scientific challenges. I really like to thank the lab and for being an exceptional partner with us, and especially I'd like to introduce Molly Cernick, program manager of the entrepreneur programs on the lab. And I believe Molly is with us. Let's bring Molly on stage here. And there you are. Hi, Molly. Molly, thank you so much for all your support. I know you have a super busy schedule, and you've always been super gracious with your time working with our cohort members. And I really look forward to expanding our partnership as we go into next year and being able to support both your program as well as you working with us. It's going to be absolutely incredible. Congratulations. You guys have been absolutely amazing. And thank you so much for all the support. And with that, Molly? You're on mute.
Sorry, I was double muted. Thank you, Payman and Alex and the rest of the team for this recognition and for creating a culture that celebrates the partnership and collaboration that you do. We're really honored to receive this award and recognition. Peachscore to us has been more than just an accelerator. It's a catalyst for growth, innovation, and connections between startups and investors and customers, and that's what attracted us to work closely with them over the last 2 years. At Los Alamos, we run a number of entrepreneur programs that are certainly designed to transition technologies out of the lab into products, but we're also running programs designed to help external deep tech startups accelerate their technical and business milestones. And the initial program we connected to Peachscore on is the New Mexico Lab Embedded Entrepreneur Program. We call it NM Leap with 2 E's to keep it simple, and you can look at more of it at nmleap.com. But Peachscore has become a key part of our curriculum and on our investor and mentor network. And just to all of you, this particular program accelerates the journey of training cutting-edge deep tech startups into investable startup companies. It's a 2-year program that offers these startups help with developing their product, particularly with an emphasis in AI, quantum high-performance computing, biotech, energy, materials, and space sectors. And so we have unique resources, testing facilities, and funding opportunities that help. And so we offer a really focused, structured experience to help you get through both your technical and business milestones. It comes with a stipend. It's a great program, and we rely on Peachscore not only to help with part of the curriculum and their network, but also to recommend companies and to put us in touch with companies like you. So just so you all know, we're opening applications at the end of January for cohort 5, which will start in January 2026. You can get on our website, as I mentioned, nmleap.com, and contact us on the form, or you can just email me directly at mollyc@lanl.gov. And I'm happy to set up a meeting to talk to you more. So anyway, Peymon and Alex, we really look forward to build, innovate, and grow more with you. So thanks so much.
Likewise. Thank you so much again, Molly. Really appreciate it. Okay, now we go from our partner award to, and I'm thrilled to announce our best startup for Q4. And make sure I'm on the right screen here. There we go. And you know what? Across all of our cohorts, we've seen incredible dedication from all of our founders. You know, you guys, they all work tirelessly to achieve their goals. Choosing one standout was really difficult, you know, and every startup in our program has had remarkable progress since they joined our program. And I personally worked with most, if not all of them. And that said, our mentors, advisors, our team, we got together trying to look for one company that truly excelled. And I'm happy to announce that Dr. Yaser of Tactical Robotics and their team are being awarded our Q4 2024 Startup Award. You know, they have been able to accomplish some amazing traction since they've joined our program. Not only they secured $350,000 in funding by graduation, they have also formed multiple global partnerships, closed over $300,000 in revenue and contracts from companies around the globe. It's been really inspiring to watch the transformation and working with Dr. Yaser through the program. Him and his team have immensely grown and have been able to accomplish many tasks and many goals that they set out at the beginning of the program. So we couldn't be more prouder of them. Again, Dr. Yaser, congratulations again. And we are really excited to see where your journey going into next year and beyond. So with that.
Sure. Good morning, good afternoon, everyone. Thank you, Peymon, Alex, and the entire Peachscore team for this recognition and for all the support you provide to startups like ours. I'm truly honored to receive this award today. We never forget your invaluable services, from refining our business model to perfecting our pitch deck, connecting us with potential investors, and helping us improve our go-to-market strategies. Your work has had a great impact on Tactile Robotics, enabling us to focus our efforts, expand our vision, and grow with confidence. I also want to thank my fellow companies and teams in the program. They are all incredible. You inspire us with your dedication and drive. This award means so much to us at Tactile Robotics. It reflects the hard work, creativity, and passion of our amazing team. We are so proud to be developing technologies that not only solves real-world problems, but also creates opportunities in healthcare training and telehealth. Our vision is simple: to make training, healing, and research easier and more effective through the power of AI and robotics, whether it's helping professionals learn better, supporting patients in their recovery, or assisting researchers to do cutting-edge research with advanced tools. We aim to make a real difference in people's lives. This award is not just a win for us. It's a reminder to keep pushing forward, to keep dreaming big, and to continue creating solutions that matter. Thank you again Peachscore and everyone here for believing in us. Your support motivates us to grow, innovate, and bring our vision to life. And most of all, thanks to my amazing team, advisors, and partners at Tactile Robotics. This wouldn't be possible without you. Together, we are building something truly special. Thank you very, very much.
Thank you, Dr. Yaser. Really appreciate it. All right, now let's go to our startup presentations. We're running a little behind schedule, but hopefully we can catch up. So as I mentioned earlier, we have 21 amazing startups across 11 industries, 7 countries presenting. The pitch format is our standard 5-minute pitch. Every startup has 5 minutes. We have all the founders of the startups online with us. However, we're going to be doing a mix of live pitch sessions as well as previously recorded pitch sessions, given the locations of some of the founders and their ability to be able to pitch live at this time. So with that, let's go ahead and get started. Our first startup company, CovSpec. CovSpec is a marketplace dedicated to biosafety technology. The CovSpec UV, its SaaS solution, delivers an open API, for UV-C dosing management. Company is out of Toronto, Canada. Pre-seed stage, has a Peachscore of 606 with a grade B-. Founder and CEO, Steven Grabenheimer. Steven.
Oops. Hello, Payman. Thanks for having me.
My pleasure.
Appreciate your time today. Give me 1 second here. It's weird. I'm having an issue with Zoom. It's not showing my tabs. It all says Chrome unknown. That's weird. Okay. Sorry, Payman. I may need to actually restart my computer here. I've got a Zoom glitch where it doesn't show which tab I can share. Do you mind going to someone else and I'll just restart my computer and go
No,
next?
not at all. We'll go to the next person. Let me bring
Appreciate
this
that.
back, and I'll bring you back at the end.
Yep, very good. Thank you.
Make sure I have the correct screen. There we go. Okay, let's go to our next presenter, company Pure Energy Stream. Empowering energy efficiency and maximizing savings. Company out of Los Angeles, United States. Pre-stage stage as well. Score of 705, grade A-. Founder and CEO, Santiago Flores. Santiago.
You're not allowing me to share or do anything on my end, my video or anything.
Really? That's strange.
Can you see my screen now?
We cannot. Let me do this. Why don't you try sharing now? And let me turn on your camera.
Awesome. Let me know if I'm sharing right now, so you should be able to see it.
No, can't. What is going on with the sharing?
Yeah, it says I'm sharing. It says you are sharing screen.
There you
Everybody
go.
else see it?
I see
Amazing.
it now. I see it. I see it.
Yeah.
And
Cool.
okay, fantastic. Okay,
Timer going. Well, thank you so much, everyone, for making the time. I'm Santiago Flores, founder and CEO of Pure Energy Stream. We're a hardware software company. We're in the climate tech space, and we're in the alternative energy subsector. Let's just start my video. Oh, do I start now?
there you go. No, go for it.
Sorry,
You're good.
it's lagging. All right. Thank you, everyone, so much. I'm Santiago Flores, founder and CEO of Pure Energy Stream. We're a hardware software company in the alternative energy subsector, where we service both fossil fuel and renewable energy sources for commercial and industrial facilities around the world. We began our journey many moons ago with my CTO and myself, where I worked on the PG&E bankruptcy, and as he was servicing large commercial facilities in China, we realized that regardless of your energy source, even from green energy, as soon as that energy enters your building, it becomes distorted due to overheated equipment that's constantly plugged in, causing a lot of heat and inductive load, and causing your energy costs to go up, your efficiencies to go down, and your emissions to increase. And so we set out to create a multi-pronged solution that doesn't just cover one main thing, which is power factor correction. We wanted a whole facility energy management system that remediates the inconsistent flow of energy to reduce energy costs, mitigate its operational efficiency, to protect equipment, and to boost production, and measure its environmental impact through a number of different logistical data points that help folks participate in carbon tax credit syndications and just be conscious and accountable for the emissions that they're outputting. And so these are the highlights of our EcoMaxim hardware. What separates us apart from the competition, even from publicly traded companies like GE, is that we actually reduce real kilowatt demand. And secondly is we actually recycle the neutral, which is the kVAR, that typically gets lost to the ground, and we use it as a secondary source of power. But more importantly, big facilities like stadiums, malls, and skyscrapers are very interested in protecting their equipment, which is mostly made up of combustion engine equipment that powers your elevators, your escalators, and your boilers and your chillers. And so it's very important for folks as we reduce the maintenance and repair costs, which also extend into more energy savings down the line. And we extend the life of all electrical equipment. Our market opportunity is directly just alternative energy, as we are looking to target even a small percentage, which we're already on our way, of 150 million market capture within the next 2 years. Thank goodness. Our business model is a B2B and B2G, and our ICP are industrial commercial facilities only. First, we have our annual, our one-time sale of each EcoMaxim unit of about 165,000 per unit. Secondly is our MRR, which is our software subscription embedded with a monthly energy savings we help clients save each month. And lastly, it's our carbon tax credit syndication. For the ESG reporting, we help clients participate in the various energy efficiency tax credit opportunities, as well as tax breaks under IRS Code 179. Our go-to-market strategy has really been in laying the foundation through Peachscore, as well as the Lacey Los Angeles Clean Tech Incubator that we're under, in promoting qualified technologies and energy solutions that have already had an economic impact throughout our city, and technologies that have been heavily vetted and can actually be deployed for commercialization. Our competitive landscape are mostly IoT systems that only are redirecting power, are not treating power to the core, or are simply doing power factor correction. We're actually treating every piece of energy distortion for all commercial facilities. This is our executive team, myself and our CTO, Mark Ware. Juan, he's our CFO, currently at Western Asset Management. And we recently onboarded our tech advisor from the CIA, as well as other executives from the Lacey Lab and our other two advisors that have been instrumental, such as Payman and David Prowse. Our traction, we've validated our product through 2 paid pilots at the largest resort in Maui, Hawaii, where they've seen more than 15% energy savings, as much as 44%. And now we are closing a multi-million-dollar PO with the world's largest small chain. And as we are continuing to work with municipalities in issuing green bonds under the IRA and the elective pay program. Thank you all so much for your time. And if I have any additional time, I'd love to open it up for questions. Thank you, Payman.
You're welcome. There's actually no questions on this session, and we'll get back to you if there's any other questions. So thank you so much, Santiago.
Yeah, thank you, Payman.
All
Appreciate
right. Okay, go ahead and let me remove this. Oh, Steven, did you want to go?
Yep, all set.
Okay, go for it.
Okay, great. Okay. I'm still having
Yeah.
the same weird issue with Zoom. I'm sorry. It's
No worries. I will show you a pre-recorded video. I need to move on. No
okay,
worries.
no problem.
All right, thanks. Okay, let me actually go to the next presenter. Let me share my screen. Okay, our next presentation, Tactile Robotics, which you guys all just heard about. So they use their healthcare engineering and business expertise to reshape dental education using AI-powered platforms. They are out of Winnipeg, Canada, a seed stage with a Peachscore of 726, grade A minus, and once again, founder and CEO, Yaser Maddahi. Dr. Yaser.
Can you see the screen, Payman?
We can, yes. Let
Okay,
me
great.
you on video too. Go for it.
Hello, everyone. My name is Yaser, the founder and CEO of Tactile Robotics. We use our expertise in healthcare engineering and business to reshape dental education. Our story is quite personal. This photo captures my wife on her graduation day, where she experienced firsthand the pain points in dental education system. Most schools do not prepare students for real practice. They feel unprepared to see patients, requiring a few more years to develop dental skills. They need help to gain these skills before practice. Every year, 6 million patients in North America are treated by new grads who face significant training challenges that impact their confidence and skills. Current dental training is limited to school only. There is not enough hands-on experience and practice, and profs are very busy to spend enough time with the students. This affects dentists and their patients in future. The solution is to use digital health, AI, and robotics to increase access to simple, effective, and measurable training by providing an anytime, anywhere learning solution using measurable metrics in training and grading and providing virtual hands-on skills through technology. The dental training industry has an annual global market of about $8 billion with an annual growth rate of 7.7%. We project to capture more than 150 million within 6 years. However, there is a much bigger potential considering our value proposition. Our product portfolio enhances dental training with AI-powered cloud-enabled robotic systems. Dentist is an educational platform with sensory-based metrics, AI-generated assessments, and 24/7 access to a virtual library. Scanner uses AI, robotics, and sensing technology for real-time evaluation. Our current application is dentistry. However, it could be extended to other fields. Our B2B revenue model is a combination of one-time hardware sales with recurring software license fees. For Scanner and Dentist, we charge for hardware and subscription fees. We also have a software-only solution. We serve dental schools, say institutions for practicing dentists, and certification boards. The average order volume per client is $260K for hardware, plus an annual recurring revenue of $65K for software. We project over 150 million in total sales by 2030 with a mix of recurring and new customers, a mix of 80% hardware and 20% software. We expect to be cash flow positive after the first year. Our GTM strategy includes direct sales, value-added reseller, and distributor networks. We have signed agreements and have ongoing discussions in North America, Australia, and the Middle East. In comparison to our competitors, we offer the only human-led dental education and grading platform. We offer key features like automatic grading, instant feedback, and smart assessment. Our leadership team are experts in engineering, dentistry, and business. Our CTO is a PhD in control systems and robotics. Dr. Kalvandi is an experienced practicing dentist with a focus on dental imaging. Our VP of commercialization has a recent exit from an AI and IoT venture. Our advisory team includes experts in digital health, education, medical robotics, and business. We rely on them for technical, educational, and business support. We have been approaching several customers in the US and Australia. Some are currently piloting our products, one recently closed, and 2 more to be closed soon. And in addition to our strong sales funnel, we have received over $1 million in governmental funding. We have a strong IP strategy, including 7 patents, and we have achieved more than 300K in sales. We also have access to a high-tech dental facility at no cost for product development, testing, and validation. And our roadmap highlights key product developments like iManus and CageView with the strategic exit plan for 2030. We are seeking 1.3 million at a 6 million pre-money valuation with 20% committed by a medical firm. Funds will drive sales, marketing, and business development to convert our current leads, target new dental schools and boards, boost industry presence at events. No funds used for inventory as we operate on a build-to-order basis. Thank you for your time. Join us in empowering new dentists so you can trust every new grad. Let's give dental students a unique practice opportunity.
Amazing. Thank you, Yaser. Appreciate it. Okay, let's go
Thanks.
to the next one. All right, our next startup, ADVAC Therapeutics, a new standard of care in anticoagulation, the proven safety and efficiency of twice a day dose in convenient 1-a-day tablet. Companies out of Half Moon Bay, United States, a seed round with a Peachscore of 633, grade B. Founder and CEO, Mark Gossett. Mark? You're on mute, Mark.
Okay, that should officially take me off mute. Put my camera
There you go.
ready to go. I think about blood clots a lot more than most people do because I spent quite a bit of my career trying to find better ways to prevent them and help patients take their medications well. For those of you that aren't familiar, blood clots contribute to 1 in 4 deaths worldwide, drive significant morbidity, and have a very high societal cost. These events are treatable and preventable. Unfortunately, patients don't take their life-saving medicines because they have concerns about bleeding. Over the next 3 years, we aim to create a new standard of care in anticoagulation. We're going to create a new standard of care in anticoagulation therapy. And in healthcare, teams are always very critical. So let's meet the team that's going to make this happen. We have a proven track record in large biopharma and startups, specifically within the anticoagulation area. We've been working together over the last 30 years, and we have helped shape and develop some of the most important advances in anticoagulation therapy. We have a long-standing relationship with some of the best advisors in the industry, and they're all well-known experts. Additionally, we have people and resources available to join us as the need arises. 65% of patients don't take their medicines. 33% never start. 25% end up taking a lower dose, and 33% are non-compliant. Many of these patients will stop their therapy and don't even tell anybody. And if they're a friend of yours, you won't know until they have a stroke, a heart attack, or they drop dead. Our science and technology, developing new drugs take a long time and are costly. The current standard of care is going to be hard to beat, but we think a different approach is appropriate. A better version of the current standard of care could give us safety, efficacy, and convenience with better compliance and better outcomes. Our patented proprietary technology, gastroretentive pulsatile release, we leverage the underlying PK/PD profile of the market leaders to create a new product that delivers the right dose at the right time to the right spot for optimal absorption. It's a proven technology with 6 granted patents with more patents pending. Our target market, we have a $60 billion TAM, which is patients at risk for blood clots. We have $40 billion SAM, which is people who are on anticoagulants, and a $20 billion SOM, which are people who fear or complexity compromises their care. We believe a less than 3% share in this market will generate more than $1 billion in revenue by year 5. Our business model focuses on 4 key segments: demand creators, patients; demand facilitators, which is healthcare professionals; demand supporters, which are healthcare systems; and cost intermediaries or middlemen. Our product will be priced at $200 to $300 per patient per month. Our financial projections show that less than a 3% share will give us $1 billion in revenue. There are 3 pre-launch milestone and value inflection points. We have a steady growth in top line with exit opportunities along the way, with a valuation of 2 to 5x revenues. Our go-to-market focuses on 4 key segments, and we'll drive health economic data, efficient customer-facing deployment, and leveraging a digital presence to go to market. The marketplace itself, there are 2 similar products: Eliquis, which is dosed twice a day, which has a reputation for safety and a 50% share of the market. Xarelto is a once-a-day product known for compliance, but faces bleeding challenges. And we believe that AdVac can produce unsurpassed safety, efficacy, and compliance at a value price point. We're seeking a $6 million seed round to support clinical and regulatory confirmation. We have traction in the form of 6 granted patents. We have a pending National Science Foundation grant and investor letters of commitment. We have an engaged leadership team and advisors. Thank you for your time. I appreciate your listening. Please feel free to email me or text me for more information, and we'd welcome you to join our journey to create a new standard of care for patients who are at risk of blood clots.
Thank you, Mark. Appreciate it. Okay. Let's go to our next presenter. Okay. Our next company is HealthQuest Gaming, where healthcare and gaming level up together. Out of Green Township, United States, pre-seed company. Peachscore of 675 with a grade of B+. Founder and CEO, Dr. Carlos Garcia. Carlos.
Awesome. Thank you, Payman. Can you see my main screen?
Yes.
Okay. Just let me know if there's any tech issues, because it seems like
actually I see multiple screens. Can you
That's
just
your
share
notes.
your notes?
Let's see. 1 second. Share here. That should fix it.
Perfect. Go for it.
All right. Hello, everybody. My name is Carlos Garcia. I'm the founder and CEO of HealthQuest Gaming, and I want to start off with a couple questions. How many of you have read medical brochures, the content, or received these type of doctor emails? I'm sure plenty. How many of you actually understand it without the support of Google or AI? Does anybody understand the impact of health literacy has on all this content I just showed you? Well, you're probably not alone. There's over 294 million US adults that are dealing with health literacy issues. What is health literacy? It's basically understanding medical information and concepts that, like the content I just showed you. Unfortunately, too many people do not understand it. And the crux of health literacy is adherence. How do we expect patients to take their medication on time, lose weight, and do all these things when they don't even understand the material that they're reading or why they have to do it? That's what leads to poor outcomes, like a 25% increased chance of death. Additionally, health literacy disproportionately impacts underrepresented minority communities because at the end of the day, it takes 2 to tango. You need the person and the organization working together in this shared responsibility around health literacy. The problem is that that's not currently how it's run until now. HealthQuest is inserting ourselves in that tango and providing the solution where we combine game and health data to create a personalized guide to better health, leading to better health outcomes. And how are we doing this? Well, first, we're building this platform. So doctors access our platforms and then prescribe games like our first launch game, which is in diabetes, to the patient. The patient plays the games and enjoys the content. In the meanwhile, all in the back end, this is where our AI is working. The AI then interprets all the data that's coming in, generates pain points around what the person is playing, so specifically where they're struggling in the game, and then generates insights for the doctor to understand where they're struggling and what to do next. That, for example, for Adam around adherence, as you could see, over time, Adam's adherence scores improve thanks to the platform, and that's what's being supported. So both the patient and the doctor, and we're right in the middle. And this is the power of the HealthQuest platform. But you're probably now wondering is why gaming? Well, there's over 215 million Americans playing video games, and there's decades worth of clinical validation between gaming and healthcare, and plenty of case studies showcasing it as well. And the market opportunity is enormous. We're specifically focused on the medical specialists. These specialists typically adopt early innovations like this. They also provide additional time to their patients, 3 times more time than normal. And also they provide additional educational tools like this to their patients as well. And in order to capitalize this, we're utilizing a dual stream revenue model where it's a SaaS platform for doctors where then they prescribe the games to the patients, and then a subscription model to everybody else. And essentially, those end users like the patients, gamers, the games are monetized as well as another revenue opportunity. Now here's our financial projections. As you can see, we have a logarithmic growth, especially as we expand to other systems like hospitals and schools. But the go-to-market strategy makes it very clear. So we first want to establish ourselves in our B2C launch, and I'm proud to announce that we're forming a major partnership with a large university in New Jersey where we're bringing other universities to an esports event where we're going to launch our game and the platform, really to advocate around health literacy and diabetes as well. Then we evolve to our B2B. We expand to those hospitals and build this ecosystem. We become the Netflix or Steam of medical education because the market is severely fragmented. There's a lot of little medical games everywhere and niche games like these competitors, but no one has built the platform until now. And I'm bringing one heck of a questing team to do this. So a little bit more about me is that I was a medical director leading 2 of the COVID vaccine launches. So I was in the health literacy crisis knee deep. My CTO has been building cybersecurity and health IT infrastructure for decades. And Rachel is our brand and engagement strategist extraordinaire. I'm happy to announce that we're raising 1 million, where we have 60,000 already committed to help transform patient learning, to essentially complete these games and evolve our platform to start collecting revenue, and then acquire more games and partnerships where we finally submit to the FDA to become an FDA-approved digital therapeutic. My final question to you is, are you ready to level up your health through the power of play? Thank you.
Thank you, Carlos.
Thank you.
Okay. Okay, our next presentation, company name Safety View. Intelligent training for a safer workplace out of Wilmington, United States, pre-seed company with a score of 785, grade A, founder and CEO Tim Walter, and I believe with co-founder as well. There we go. Amazing. Let me stop share and you guys go for it.
Hey, thanks, Payman. How's everyone doing? My name is Tim Walter, and this is my co-founder, Chelsea. We've both witnessed the devastating impact of construction accidents. I've seen it working in the construction industry, and Chelsea has seen the aftermath in the hospitals. These accidents are often preventable with the right training, but current methods aren't cutting it. That's why we created Safety View. This is Dave. He's one of my best friends. We worked in construction together. One day he was on a site and everything changed for him. The ladder he was on was struck, causing him to fall 2 stories, leaving him with metal throughout his body. Not only did his life take a very different turn, but it cost over $4 million to the company and insurance.
With the right training, that operator would have seen the danger, alerted their team, and responded quickly. Unfortunately, the current training methods just don't prepare them for real-life situations like this. Look, the old way of training just doesn't stick. Studies actually show that workers forget up to 70% of what they've learned just within a day, which is a huge problem in construction where split-second decisions matter the most.
And SafetyView is a complete safety training system. It had realistic simulations, personalized learning, and detailed analytics. And studies show that personalized training boosts skill retention by 33%.
Our patent-pending adaptive engine adjusts in real time, allowing workers to learn from their mistakes and build the right reflexes through personalized learning. Let me show you how it works. Operators train on simulators while their spotter is with them in VR, just like on a real job site. Our adaptive technology personalizes the experience, adjusting the difficulty in real time. For example, this operator forgot to check his blind spot, so our technology put something in his way, forcing him to react quickly. Or not. SafetyView Insights then tracks their performance, providing data to help prevent this from happening in real life. By experiencing the consequences of their actions, this helps develop those reflexes that can help prevent accidents in the real world.
And the construction market is huge. Everybody knows it. With lots of opportunities for technical advancements. Safety training is a $180 billion market. Our beachhead is heavy equipment sector with a SOM of $1.8 billion. With the help of our pilot program, as well as partnerships, we project $57 million in combined revenue within 5 years.
And just like our technology, our pricing model is adaptable for businesses of all sizes. So this will help us reach a wider audience and grow with our customers. For those only focused on data, SafetyView Insights can be purchased separately. And we also see potential in licensing our adaptive training engine in the future.
We're gaining traction with early adopters like Lexicon using our pilot. We're participating in accelerator programs like Peachscore, as well as Smart City Works. And we've secured pre-seed funding from family. We bootstrapped over 35K and are generating 5K in MRR through consulting services. We project $6 million in revenue with 1,600 licenses in year 3 and $32 million with 7,500 licenses in year 5.
To do this, we're launching in the Southeast, which is one of the fastest growing construction markets in the US. We're looking at reducing accidents by up to 30%, increasing productivity, and lowering insurance premiums. To make this happen, we'll be working closely with safety directors, training managers, insurance companies, and unions. Our competitors, especially CM Labs, do a very decent job with simulation software, but SafetyView offers a more complete solution. We don't just focus on operating the machinery. Our training allows workers to train together, identify hazards, and provides overall safety awareness on site. Plus, our AI personalizes the experience and provides real-time data. It's a combination you won't find anywhere else.
We're a passionate team. We've been working together for over 4 years now. I bring 15 years of experience in construction, combined with 12 years leading and managing startups. Chelsea, our CXO, is a nurse who understands the human cost of these incidents. And Roger, our AI developer, is co-founder of a robotics group and is the brains behind the adaptive technology. Together, we have experience and drive to make SafetyView a success. We're seeking $500,000 in seed funding to bring SafetyView to market. This investment will allow us to expand our team, accelerate product development, and enhance our marketing efforts.
Thank you all so much for your time. We're excited about SafetyView's potential and would love the opportunity to discuss it further with you.
Thank you.
Great job, you guys. I love the collaboration. Good work.
Thank you.
You bet. Okay, let me go to the next. All right, our next startup presenting, company Cadenza, AI for nonprofits to increase funding and reduce cost out of Monterey, California, pre-seed stage company, Peachscore 691 with a grade of B+, founder and CEO, Mark Reith. Mark.
All right, let me share. Hopefully everything's good.
Yes, go for it. Thank you.
Perfect. So yeah, my name is Mark. I'm the CEO and co-founder of Cadenza. I started Cadenza. I was trying to solve a problem for my wife. She is the treasurer of a local nonprofit here, and they really struggled to generate revenue because they weren't able to articulate their impact, share their impact through grant writing and through donor engagement. And this is a common thread with many nonprofits. The challenge here is that grants are really scarce. They could take months to write. They are often not very successful. On the donor side, well, donors just kind of give up. They don't give the next year. Churn is really high. Donor retention is very, very low. And ultimately, this means that money just kind of runs out for most nonprofit organizations. So the solution is really what we say standing out and scaling out. So standing out is let's make grant discovery easy and let's really stand out in those applications. And then similarly, on the donor engagement side, let's stand out as well through personalized communication, building brand loyalty, understanding the impact that those dollars make, and with an underlying just automation behind all of this. And that's where Cadenza comes in. So Cadenza is AI for nonprofits and other impact-driven organizations to increase funding and reduce costs. So we find funding. We identify diverse funding sources, such as grants and donors, and we tailor those and make recommendations based on each individual organization, and we help win more grants. So we streamline the entire grant process. So we help find and identify grants, apply to grants, and even do the reporting on grants using technology. And on the donor side, we also use tools, AI tools, to showcase impact, which builds trust. This ensures long-term support with your donor base. Market opportunity here, this is the digital transformation market for nonprofit organizations, which is very large. Nonprofits are actually really interesting. They're about 3 to 5 years behind in technology compared to like the enterprise space. So it's actually an amazing opportunity. It's like investing in AI 5 years ago, knowing what you know now. So definitely a good market opportunity there. Our business model, we are traditional B2B SaaS. We focus on impact-driven organizations. We offer different subscription models. We have a number of nonprofits, about 10 that are paying customers now coming out of our private beta. Looking at our financial model, we project about 2 to 3x growth year over year. A little bit of an exception between the first year where we can get some additional scaling, but this shows that we can reach even 100 million in ARR in 7 years. Our go-to-market strategy, again, pretty traditional for a SaaS company where we have our direct B2B using lead and demand gen. We actually have a very healthy partner affiliate pipeline ramping up. And then we have some subscription upsell opportunities through grant writing and some additional training. I mentioned that our initial primary target market is nonprofits, although we actually have a paying customer that's a research organization for profit. We have some very big expansion opportunities here with NGOs, academic and research institutions, for-profit ESG businesses, healthcare, government, et cetera, anywhere where impact is part of revenue generation. Looking at the competition, Blackbaud is the one that kind of stands out as the big market leader. They're a big multi-billion-dollar publicly traded company. Instrumental came out of YC a number of years ago, and some others within the nonprofit space. Most of these are kind of legacy, is what I would call them. Like they have maybe a database of grants or their CRM, but they don't kind of have AI baked into this. I think that search has changed over the last 6 months, even where search is no longer just like a keyword kind of Google search, right? It's using AI to match and do intelligent searching, and that's what Cadenza does. So we identify grants that are tailored for your organization and opportunities for your organization. And then we also, when it comes to identifying impact, we don't just look at output and outcome, which are kind of the metrics from the organization. We use academic research automatically, and we tie in the impact. So we call it output, outcome, and impact to show the overall trajectory of the impact of the organization. And that's how you stand out in grants. That's how you stand out in donor communication. That's what makes Cadenza different. The team already met me. I have had a previous exit from a previous company. I have an MBA. I have a second master's in data and AI. My co-founder, Zach, he's our chief storyteller. He comes from a background in journalism, but he has sat on a family foundation as a board member. And so he knows firsthand the struggles of nonprofits trying to find money from these foundations. So definitely a strong data-driven storytelling team. The ask here, 500K, most of it going towards sales and marketing. That's where we really need to scale. We have a really strong product, but we are an AI company. So definitely some R&D in here as well. I appreciate the time. Again, my name is Mark. There's my contact information.
Thank you, Mark. Great job. Okay, let's go. Okay, our next presenter, Follow Up Now. Follow Up Now aims to solve the key challenges of professionals face in following up effectively to build solid business relationships. Out of Cooper City, United States, pre-seed company as well. a Peachscore 700, grade A-. Founder and CEO, Wally Sharif. Wally.
As professionals, we're always networking. But take a moment and think about the last networking event you attended. How many digital or paper business cards did you collect? How many LinkedIn connections? And more importantly, how many of those connections turned into meaningful business relationships? Every year, professionals like us attend networking events. But the painful truth is, the majority of those potential relationships never materialize. Why? As a business professional with 25 years of experience, I've seen this challenge repeatedly. We're great at meeting new people, terrible at the follow-up. And it comes down to 3 simple barriers: not enough time, not a good system, and not knowing what to say. This networking dilemma isn't just costing us opportunities, it's costing us lost revenue and lost opportunities. So to solve this problem, business professionals need to make following up easy, efficient, and effective so they can get to building relationships with other professionals. What if following up and starting that conversation wasn't such a chore? Introducing Follow Up Now, the first professional relationship management mobile app designed for professional networkers. First, scan a digital or paper business card on the mobile app, and the next day, your new contact gets a customized follow-up message. And that follow-up message is designed to help gather crucial information about their ideal clients, their referral needs, and their business interests. But we don't just collect this data, we make it actionable. Our AI-powered technology identifies potential business matches and referral opportunities within your network, turning those casual connections into revenue-generating relationships. And the market potential is huge. There are 93 million business professionals in the US alone. Here's what's exciting. They're already spending money to try to solve this problem. They're buying CRMs that offer too many options, subscribing to networking sites that are thin on networking, and paying for networking organization memberships. We're not creating a new market. We're providing a focused solution to an existing one. And our target is to reach 5 million professionals in the first 5 years. Our vision is to help business professionals build, maintain, and then monetize their professional networks. With our B2B SaaS model, we have 2 revenue streams. Tier 1, build and maintain, focusing on capturing contacts, next day follow-up, and relationship nurturing. While Tier 2, monetize, allowing professionals to earn for the referrals that they make. We're targeting individual professionals rather than corporations because we believe your network should be yours to keep and monetize, regardless of where you work. And wherever professionals go to network for business, we will be the tool they take with them. We will partner, sponsor, and revenue share with individuals and organizations that focus on bringing professionals together. Our beachhead is a professional networking space, and we have plans to engage B2B trade show and expo organizers to be the app of choice for their events. Our competition is spread among many verticals. We are the CRM for those without one, the front-end tools for those with one, and a complementary tool for members of networking organizations. My background includes 25 years as an entrepreneur and business owner. I'm supported by my CTO with 20 years of project management experience, plus a dedicated AI advisor to ensure we stay at the cutting edge of relationship technology. And we're already seeing traction. We've raised $20K from early believers who understand this opportunity. We went live in the App Store a week ago with 30 downloads and 6 paid users. Now, these are the numbers we will hit with aggressive marketing and strategic partnerships in the professional networking space. Our goal is to create opportunities to put revenue to the pockets of professionals using the app with our strong referral program. But to get there, we're seeking $350K to complete our most requested features. build out an experienced business team, execute our marketing strategy in a professional networking space. This investment will help us reach our first 1 million subscribers. We're looking for more than just capital. We want investors with connections in the networking space who see the opportunity in professional relationship management. With follow-up now, we're not building just another app. We're creating the future of professional relationship management, because your network is your net worth. But the fortune is in the follow-up. Follow up now.
Thank you, Wally. Great job. Okay, let me go back for Stephen. So just to recap, Stephen's company, CovSpec. CovSpec is a marketplace dedicated to biosafety technology. CovSpec UV, its SaaS solution, delivers an open API for UV-IC dosing management out of Toronto, California, Canada. Almost at California. Pre-seed company with a score of 606 and a grade B-. And here's Steve's presentation. Let me switch screens.
Hello, everyone. I'm Steven Grabenheimer, the CEO and founder of CovSpec UV. CovSpec delivers real-time tracking and measurement of UV light. It delivers precise UV exposure data, helping businesses optimize safety and environmental quality. Our team hosts a rich tapestry of talent in software development, microbiology, and ultraviolet light research. I have 20 years of SaaS and hardware sales experience, working for 2 publicly traded technology companies, and I had a successful exit of my previous startup in 2017. The remainder of our team are all mostly PhDs and senior researchers in UV light applications. Both Tatiana and Richard work for federal government agencies. We recently onboarded Senator Curtis Olofsson, who sat on Congress from 2006 to 2012 to join CovSpec as a board advisor. Many facilities face challenges in optimizing ultraviolet light due to difficulties in accurately measuring and managing UVC fluence or dosing. These challenges can lead to inefficient energy use, dosing inaccuracies, the absence of data, and cost management issues. To address these said problems, CovSpec offers a climate tech-focused marketplace where we procure biosafety and UV products. We built an ultraviolet light dosing measurement API specific to the disinfection equipment industry, where about 90% of UV products today are not software enabled. CovSpec's Bioscore marketplace currently hosts around 200 biosafety products, but we aspire to reach 5,000 products in the next 2 years. CovSpec's marketplace, it actually operates like a trap. We onboard UV vendors, and then we leverage that relationship to sell them our software API to transform and tech enable the UV industry. CovSpec UV is a software subscription API designed to support the dosing levels of ultraviolet light, or UVC. Our platform hosts a pathogen control database, which contains detailed information about various pathogens and the time required to deactivate them. The API allows users to gauge UVC fluence measurement, which is the amount of ultraviolet C light exposure used to inactivate pathogens. The API enables users to integrate their devices and systems with the platform. The current TAM for the infection control, water treatment, and wastewater treatment market size is $554 billion. When we silo the SAM down to the markets that we can service, which is primarily North America and Europe, the $554 billion TAM is reduced to $164 billion SAM. Factoring in 0.5% of a conversion of that $164 billion SAM, we seek to capture $820 million in revenue generated in 7 years. CovSpec's product market fit is a business-to-business model. Our average marketplace rev share agreement ranges between 4 to 50%. The cost of CovSpec UV is between $2,800 and $6,200 per seat. Third-party service engagements will all be priced between $35K and $280K per project. In 2024, we anticipate $250K in annual revenue from our marketplace and $100K in annual revenue from CovSpec UV, With our continued partnerships and our go-to-market strategy, we anticipate rapid growth, reaching $800 million by 2029. Our go-to-market strategy primarily requires an investment to build a team of AEs that are both strategic and passionate about clean tech and climate tech. While most of our competition have high overhead due to manufacturing costs, CovSpec remains lean and asset light by focusing on deploying software to the UV space and by leveraging non-direct fulfillment for our marketplace. CovSpec's generated over $100K in revenue, and we hold 23 partnerships, including Berkshire Hathaway. We're in the final grant stages with Elevate IP. The EPA is reviewing CovSpec UV for water treatment-based emergency response applications. We recently won an RFP to get Coca-Cola Ballina Beverages in Ireland, where Coke pilots most of its R&D, to move away from mercury-based water treatment over to sustainable LED water treatment. Coca-Cola India has agreed to a PO with us once Ireland's project is completed. We're looking to raise $500,000. We'll deploy seed capital on product and engineering. We'll use these funds to monetize and execute our growth strategy through investing in sales and marketing. CovSpec is the realization of an executed vision for a safer and healthier future indoors. Thank you.
Okay, thank you, Stephen. Our next company. Our next company is IgniteGTM Precision Medicine. IgniteGTM Precision Medicine revolutionizing cancer diagnosis with comprehensive, accurate, rapid, and non-invasive testing. Company is out of Boston, United States, pre-seed stage with a Peachscore of 733, grade A-. Founder and CEO, Roya Khosravi. And let's see. Okay.
Hello and welcome to this presentation. My name is Dr. Roya Khosravi Far, and I'm the CEO and a co-founder of IgniteGTM Precision Medicine. Imagine a world where prostate cancer tests, colonoscopies, and mammograms were not available. Many more millions of people would be dying each year, perhaps even some of us and our loved ones. Still, in 2024, there are no early diagnoses for many types of diseases. IgniteGTM is changing that with our patented and patent-pending diagnostic platform. Our beachhead market is for head and neck cancer with a global diagnosis market of over $5.7 billion. This cancer is caused by HPV infections, which is the most common sexually transmitted disease, as well as by smoking and alcohol consumption. This cancer is one of the few cancers that its incidence and death rate is increasing significantly. With this cancer, there is no early diagnosis, and by the time the disease is detected through invasive and painful biopsies, it's too late. Most patients die within 5 years. This is not acceptable. At IgniteGTM, we have the solution. Our technology uses saliva to simultaneously detect different classes of cancer markers using our innovative chemistry and AI decision algorithm. It will provide actionable results to clinicians in their offices within 30 minutes. This is going to save many, many lives. Our market opportunity for cancer diagnosis is huge. With our initial target market of oral surgeons and ENTs in the US, we will achieve over $850 million in revenue by year 5 post-launch, just for our first indication and just in the USA. There is also opportunities for growth by expanding to dentists and PCPs in the US, as well as expanding to other global regions and other cancers. We have developed and validated our technology and achieved an accuracy of 98% with simulated specimens. The current diagnostic accuracy for head and neck cancer with invasive biopsies is about 75 to 80%. Our business model is a razor and blade model. and most of our revenue is generated from our disposable kit. There is already an insurance code that can be used for our test. Our go-to-market intensive and more accurate, and will be performed in doctor's offices at point of care with results just within 30 minutes. We have raised over $2 million in non-dilutive funding to de-risk our technology. With an additional $1 million, we will perform clinical studies and design lock our integrated chemistry and device. InTech has a strong leadership team. I'm a professor entrepreneur with expertise in translational medicine, oncology, and diagnostics, and I have led large, well-funded teams. Other team members have expertise in device engineering, patent, and business strategy and commercialization. Some of us have had prior early exits in diagnostic and device companies. We also have a strong advisory team with oral health, molecular diagnostic, and business and commercialization expertise. Thank you for your attention. Please contact us if you have any questions, and let us work together to save lives. Thank you.
Okay, let's go to our next company. Thank you, Roya. And let me share. Our next company is Beyond. Growth through innovation for humanity out of Austin, United States. Pre-seeds company, score of 643 and a grade of B. Andrew Ronchetti is founder and CEO.
Hello, I'm Andrew Ronchetti, co-founder of Beyond. I'm excited to introduce to you today a platform that seamlessly integrates workforce productivity and wellness, ushering in a new era of enterprise employee performance management. It's time to unite these synergistic forces into a comprehensive solution shaping today's new normal. Enterprises are grappling with fragmented solutions that don't connect employee wellness with key productivity metrics like engagement, absenteeism, and performance. And this disconnect is costing businesses $320 billion to over $1 trillion annually in lost productivity. And companies not only struggle to maintain resiliency and an engaged workforce, but the ongoing challenges of balancing wellness and productivity are holding them back from unlocking their team's full potential. So our solution is a unified human-centric employee performance management platform that integrates wellness and coaching throughout the workday to boost productivity. And by empowering individuals to grow holistically, both professionally and personally, while aligning that to organizational objectives, we can unlock human performance like never before, enabling the business to support their people without compromising results. So Beyond is that unified productivity, engagement, and wellness all-in-one employee performance management software that provides real-time support and skill development to drive measurable outcomes. It's designed to tackle enterprise productivity and employee well-being challenges by focusing on capability building, real-time feedback, and aligning with the organizational objectives. And unlike quick fix solutions, Beyond turns these insights into impactful actions, fostering a sustainable, engaged workforce that delivers real results. Employees invest a significant amount of effort into their jobs, but the disconnected personal tools fall flat, causing discouragement. And with corporate wellness markets projected to be over $87 billion by 2026 and digital health solutions expanding, we're positioned to capture $225 million of our SOM over the next 5 to 7 years. And that's because we're focusing on a growing recognition that wellness and productivity are linked, especially as middle management faces increased pressure. By addressing that pain point and demonstrating success, we aim to drive impact and expand across industries. We've targeted Fortune 2000 companies, positioning Beyond as a B2B SaaS platform addressing pressures on middle management. And our integrated performance, engagement, and wellness solution empowers managers to navigate the demands of both executives and employees to drive measurable, sustainable results and boost productivity. So by focusing on enterprise clients, it gives us a clear path to financial success. We're leveraging existing relationships early on for traction and accelerating growth as companies recognize that the competitive advantage they have is in integrating employee performance and wellness. Our flexible financial model also ensures that we can adapt to the enterprise landscape and drive sustainable growth over time. And our deep expertise in enterprises, as well as developing and integrating enterprise-grade software, gives us this distinct advantage because we've built strong relationships with leading enterprises, and we can leverage strategic partnerships to expand our reach. And this positions Beyond as a premier B2B SaaS platform for embedding wellness into the core business strategy, driving performance and sustainable growth. Competitors like to treat performance and engagement and wellness as separate, isolated HR solutions. But Beyond bridges the gap by focusing on business outcomes, not just HR metrics. And our unified human-centered platform integrates all these aspects that drive results, optimizing employee well-being and aligning it with organizational objectives. And this resonates not only with HR leaders, but executives seeking meaningful impact that sets them apart. For over a decade, Stacy and I have been working together, solving challenges in the enterprise space and building foundations of expertise and trust. And now with that and our accomplished advisors, we're leveraging this deep understanding to shape Beyond into a platform that meets enterprise client needs, drives measurable outcomes, and sustainable growth for Beyond. We're seeking a $250,000 pre-seed investment for a $5 million pre-money value cap to secure a 15-month runway. And this funding will accelerate product development, scale marketing and sales, and optimize operations for sustainable growth. Look at it this way. Investing in Beyond means embracing a future where employee performance is a dynamic outcome integrated with wellness and engagement at its core. And we're redefining how enterprises drive productivity by embedding these capabilities into the fabric of the business. I want to thank you for your time.
Okay, thank you, Andrew. Now let's go to our next presenter. Shidosha, excuse me. Breaking time between barriers with AI-powered mentorship, accessible anytime, anywhere. Companies out of Boston, United States, pre-seed stage company with a score of 652, grade B+. Prasad Velu, founder and CEO. And there it is.
Hey everyone, I'm Prasad, the founder and CEO of Shidosha. This is a day I've been looking forward to for the past 12 months. Today, I want to introduce you to Shidosha, a mentorship platform for every moment. Let me start with the why. Great mentors are everywhere, but time is the biggest barrier between those who need guidance and those who are willing to offer it. Traditional mentorship, it's like a roll of the dice. Even if you're lucky enough to find it, you're stuck with rigid schedules that don't fit your life. And scaling, forget it. It's limited by time and reach. On the other hand, you have e-learning and cohort programs that are like factory settings. No room for flexibility, no personalization, a one-size-fits-all approach in a world where everyone's needs are as unique as their fingerprint. The problem isn't lack of mentors, it's access. The world needs a mentorship solution that moves at the speed of life. Opportunities come and go in an instant. The right guidance, the right time can change everything. This is mentorship unbound, because time waits for no one, and neither should you. 4 years ago, a question sparked a vision. Steve Jobs said, I could go read what Aristotle wrote or Plato wrote, and books are a phenomenal thing. But the problem is, you can't ask Aristotle a question. In the next 50 to 100 years, if we can really come up with these machines that capture an underlying spirit, an underlying set of principles, an underlying way of looking at the world, then maybe when the next Aristotle comes around, and when they are far dead and gone, you could ask these machines, what would have Aristotle said? Today, I'm here to tell you, we have delivered it. Shidosha is where human wisdom meets AI, a platform that breaks the barriers of time, scale, and access. Do you need guidance? Browse to the greatest minds in their fields on our platform. Want clarity? Book a meeting instantly. Seeking answers anytime, anywhere? Your mentor's insights are always with you, infinitely scalable through AI-powered digital twins. When it comes to the market opportunity, we're looking at a $3 trillion global online learning sector. But we aren't just chasing numbers. We're unlocking potential. The US mentorship market alone holds a $20 billion opportunity. In India, with 1.45 billion people and over 1 billion smartphones, the potential skyrockets to $30 billion. But today's solutions are basic tech, fragmented systems, and rigid schedules. They've missed what truly matters: availability, personalization, and infinite scalability. Where there's a smartphone, we will be there, and we will seize it, starting with 687 million obtainable market. Our business model is quite simple. Subscriptions for continuous mentorship, on-demand sessions for flexibility, and B2B partnerships for scaling quickly with enterprises. And with SaaS licensing, mentors can deploy their digital twins to scale their impact. Everyone wins. To us, revenue isn't just a number. It's a reflection of the value we create. By 2029, we're targeting $100 million in recurring revenue. Also, by focusing on what truly matters, increasing value per user, expanding globally, and creating a deeper enterprise play. We know the journey will be anything but linear, as you see in this picture. And with a vertical AI product like ours, growth follows its own rules, scaling unpredictably and accelerating when least expected. So the real revenue story will be written as we push beyond boundaries and redefine what's possible. Our go-to-market is that we aim to scale fast, starting to pilot in the US and India. Our strategy is to drive organic growth, build smart partnerships, reach users where they already are, simple and effective. This is our competition, who are living in the past, and this is exactly why we built Shidosha, to break free from this old way of outdated, fragmented, expensive, and limited offerings. And this is a future that is limitless, personalized, and accessible. Imagine one mentor with the ability to impact millions of lives without being bounded by time, space, or availability. So the choice is simple. Do you want the old way, or do you want the limitless, personalized, and accessible future? And this is the team that's making it all happen. We're a globally distributed team of builders, not just dreamers, driven by decades of experience, turning 0 to 1 ideas into global products. From back-end brilliance to front-end finesse, we've all worked together in our previous lives. Our expertise isn't just products and battle-tested, and you are going to want to be part of it. The ask is that we are raising $750K via SAFE, giving us 15 months of runway to scale fast, further develop the platform, acquire users, and enter new markets. Now, we're asking for your partnership to fuel this revolution. The plan is simple: allocate and execute smartly. Together, we'll take Shidosha to the next level. Thank you.
Okay, our next presenter is Putrex 360. Putrex gamifies golfers' putting practice, transforming boring practice routines into an interactive, engaging, effective experience. Companies out of Orlando, United States, in a pre-seed stage, Peachscore of 645, grade B. Mark Colangelo, founder and CEO.
Putrex 360. Putrex 360 is golf's first smart training technology specifically for putting. Putting makes up 45% of your score in golf. So to improve your game, you have to improve your putting. The problem is golfers are spending billions each year trying to improve, but not seeing results. One reason is that golfers have no way to measure their performance deficiencies. Without this, practice is guesswork. Also, too many golfers are led to adjust their technique, which more often backfires and causes setbacks. And golfers just find it hard to stay focused during putting practice. Together, these problems will limit or even prevent improvement. That's why we set out to build the first smart training technology for putting. PutTrax uses computer vision to translate each golfer's unique putting patterns into personalized, data-driven instruction. It's smarter practice because it analyzes dozens of data points to pinpoint exactly what to practice. Golfers improve faster because PutTrax addresses their putting performance, not their technique. And the whole experience is gamified, making it more interactive, more engaging, and overall more effective. PutTrax 360 is made up of a patented camera and analytics system paired with a companion mobile app. The system basically watches users' putting practice, determines their strengths, weaknesses, and tendencies, and then from this data, PutTrax provides immediate feedback and personalized coaching. So golfers always have the best insight and the most interactive experience the game's ever seen. There are 65 million on-course golfers worldwide, and that's growing at about a 7% clip right now. About 25 million of those are avid golfers. These are the ones who play the most, practice the most, and spend the most to improve. This is our target market. In the first 5 years, we'll acquire 180,000 customers for about 110 million in top-line revenue. From there, we'll continue to sell and ship at least another 1 million units to capture 4% of our SAM. We're mostly a D2C company, and we do have a small and important B2B component that I'll touch on later. All customers pay $450 for the hardware, plus a subscription for the mobile app. And optionally, they can do in-app purchases for various things like games, analytics, and advanced reporting. As far as our financial forecast, I mentioned earlier, we'll do about 110 million over the first 5 years. This is what that looks like on a year-to-year basis. Going back to that B2B portion of revenue I mentioned, that segment will amount to 10, maybe 15% of sales, but it is really important for building product credibility and developing our online brand for D2C customer acquisition. We partner with a full-service marketing agency to research and co-develop a go-to-market strategy and budget. The top D2C marketing channels we arrived at are influencer partnerships, digital marketing, and golf event marketing. At the same time, we'll acquire team accounts or coaches via direct sales and channel partnerships, some of which are already in process. As far as our competition, there are new and established companies both that we consider competitors. None of them, however, can capture the performance data that PutTrax captures, and their existing tech cannot be repurposed to compete. So not only are we the only training system using performance data and AI-driven instruction, as you can see, we're also favorably priced. Our team is small but highly capable. Myself, I've held executive roles with 6 startups, grew as a founder with 3 successful exits where I led 7- to 9-figure ARR growth. Ryan's our golf industry vet. He played pro golf on tour. He was a PGA teaching pro. And after retiring, he spent 20 years working for the PGA of America, heading up national programs. And Alex, he's everything optics and computer vision. He has over 30 years in photonics, optical hardware, and related systems design and engineering. Our team is supported by a diverse board of active advisors as well. These come from pro golf in the US, Europe, even into golf instruction, golf industry, and big tech. As far as traction, we're pre-revenue, but already building significant customer relationships, including securing 9 letters of intent and recently starting to take pre-orders. We've also arranged a pilot with one of the largest elite golf organizations in the US, and we have customers across all of our segments waiting on product. To that end, we're raising $500,000 on a $5 million pre-money safe. This will complete product development for us and take us through commercial launch in the US. This will also give us an 18-month runway. And as you can see, there's a significant portion of that that's allocated to driving customer acquisition. Thank you so much for taking time to learn how PutTrax 360 smart putting tech is going to transform golfers' path of improvement.
Okay, thank you, Mark. Now let's go to our next company. Our next company is Springtime, accessible financial services for unbanked and underserved individuals and businesses in Africa, driving financial inclusion. Company is out of Kampala, Uganda, pre-seed stage with a Peachscore of 649, grade B. Nabasa Archie is founder and the CEO.
Hello, everyone. Thank you for joining. My name is Nabasa, and I'm the CEO and the founder of Springtime. Springtime is a financial technology services provider. In remote areas, West Africa, 57% of underserved individuals and businesses are still struggling with limited access to the essential banking and financial services. This is due to lack of accessible banking infrastructure and financial exclusion. We've developed a digital banking platform, and it offers digital banking access, cashless transactions, and financial inclusion. Our product is a SaaS, and it's accessible via mobile and web. Its core features include an access to digital banking, cashless payments, and an access to the agent banking network. Our term is Africa, and it's 210 billion US dollars. There are 700 million people. These are the underserved individuals and businesses. Our sum is 45 billion US dollars. There are 150 million people. These are communities with internet and telecommunication infrastructure that we can use to offer the service. Our sum is 1.125 billion US dollars. There are 65 million people. We are aiming at capturing 2.5% within 5 to 7 years. Our business model is B2B2C, where we charge a flat fee per transaction. If a single transaction, its amount is between $0 and $100, we are able to earn $0.3 of that transaction. If the amount of that transaction is more than $1,000, we are able to earn $3.5 of that single transaction. Our revenue is based on transactions. The more transactions we're able to process, the more revenue we're able to earn as a business. We project that by 2030, we should be processing 150 million transactions per year. This will be equivalent to 225 million US dollars annually from the year 2030. Our go-to-market strategy involves combining collaborations with companies and strategic partnerships. This is meant to increase customer acquisition and increase product outreach. Springtime is the only fintech product in the market that is having a business model that's B2B2C, whose transaction costs an average 10% lower than other players in the market. We have developed an agent banking network and we have more than 100 professionals already onboarded. We offer a full coverage of mobile money aggregation. We are already integrated with major African banks, and we offer a comprehensive wallet payment service. Our team has a combined experience of more than 10 years in mobile banking, agent banking, microfinance, mobile engineering, and payment systems engineering. This not only ensures that we are developing a good product, it ensures that this product is the right one for the communities. Communities use our platform to initiate and make payments. We have 95% customer retention rate, 2,500 active customers this year. We have also recorded a 15% month-over-month user growth. We have already closed 5 key strategic partnerships, and we have more than 100 agents onboarded and ready to serve the community through our agent banking network. With a run of 12 months, we have raised 15K. We are seeking an investment of 100K into the business. These funds will be used to boost the marketing and sales, product feature development, business operations, and 10% research capital. We are extremely excited at the opportunity of integrating underserved communities into the digital economy. we look forward to a partnership with you so that we can turn our vision into a reality. Thank you very much.
Okay, thank you so much, Nabasa. Our next company is Roundways, empowering medical professionals to learn, invest, and connect. Out of Las Vegas, Nevada, in the United States. Stage is pre-seed. Score of 701 on Peachscore with a grade of A-. Ana Espinosa, founder and CEO.
Hello, and thank you for joining us today. My name is Ana Espinosa, and I am the co-founder of Roundways. Roundways is an AI-first platform designed to empower healthcare professionals with personalized financial solutions. Let's explore why this mission is essential and how we're making it happen. Imagine dedicating over a decade to building a career in one of the most demanding professions, only to realize that you're ill-equipped to manage the financial challenges that come with it. Healthcare professionals face an average of $200,000 in career debt, yet they receive no formal financial education. They often miss opportunities to invest, save, and grow wealth, leading to stress and burnout. Studies show that 68% feel financially unprepared and 65% regret not starting their financial planning sooner. Now, imagine an ecosystem where financial advice is personalized, tools are built to align with your unique career path, and decisions are guided by data-driven insights. A system where your financial goals are seamlessly integrated with your income, career trajectory, and future ambitions. This isn't just financial planning, it's financial empowerment designed for professionals who deserve it the most. Roundways is the first platform of its kind built exclusively for all healthcare professionals, not just doctors, but also nurses, medical students, technicians, and anyone in the field who faces unique challenges. Our platform is powered by AI-driven insights and designed to address the specific needs of this diverse community. What sets us apart is that no other platform offers this combination of financial education, wealth-building tools, and community tailored to healthcare professionals. Generic financial apps fall short because they fail to consider the demands of and constraints unique to this field, like high debt, long education timelines, and unpredictable schedules. The global market for professional education and robo-financial services is worth over $58 billion, with an annual growth rate exceeding 30%. We're targeting North America and Europe initially, focusing on healthcare professionals, a segment largely underserved by existing financial platforms. With a 5% market penetration, we project $45 million in revenue within 5 years. Our subscription-based model offers 3 tiers: free, which is free tools at no cost; standard, comprehensive features for $300 a year; or premium, our advanced AI-driven advisory for $650 a year. This tiered approach ensures accessibility while driving revenue growth as users scale their financial goals with us. Our financial projections are ambitious, but grounded in realistic market penetration. Starting with $250,000 in 2025, we anticipate reaching $45 million by 2029. This growth reflects the scalability of our platform, the size of our market, and the critical need for our solutions. Our go-to-market strategy focuses on building credibility, driving adoption, and fostering organic growth. Paid ads targeting high-intent platforms, value-based content such as blogs and webinars, CME accreditation partnerships to integrate into continuing education programs, referral programs, and industry sponsorships leveraging healthcare networks, and SEO, social media, and email campaigns to build organic and long-term traction. The fintech space has many players, but few cater specifically to healthcare professionals. Competitors often offer generic tools that don't address the unique challenges of this audience. Roundways stands out with an AI-powered personalization tailored to income stability, career progression, and healthcare-specific needs. Integrated mentorship through AI-driven matchmaking, career-linked financial planning that aligns goals with professional trajectories, and much, much more. Our competitors focus on broad markets while we deliver hyper-specialized solutions for a niche that's historically underserved. Brownbase is led by a team that's deeply passionate about solving the financial challenges healthcare professionals face. With a unique blend of entrepreneurial expertise, technical leadership, and personal experience in the medical field, our co-founders bring the vision and execution needed to make Brownbase a success. We're seeking $500,000 in pre-seed funding to enhance our technology, scale our marketing, and expand operations. This funding provides an 18-month runway to refine the platform, grow our user base, and establish strategic partnerships. Healthcare professionals dedicate their lives to others. It's time we help them with secure their own futures. With Brownbase, we're transforming how they approach financial wellness, empowering them with tools and confidence they need to thrive. Join us in making a meaningful impact. Thank you for your time.
Okay. Thank you, Anna. Let's go to our next startup. Presenting will be Waterway World, Inc. Your on-demand sea adventures awaits with Waterway World out of Miami, Florida in the United States. Pre-seed stage, Peachscore of 635 and a grade of B. Founder and CEO, Lamarco Marciano.
Hello, I am Lamarco Marciano, founder and CEO of Waterway World. Have you tried to book a boat lately and it's not as simple as booking a flight or a hotel? Because you have to wait hours or days for that boat owner to get back with you. And then you have to figure out just this boat comes with a certified captain because you don't want to be responsible piloting a $1 million vessel on the water. And plus you just want to enjoy your family trip. The problem with the boat industry is that 75% of the boat accidents are caused by untrained operators because most passengers rent boats without being trained or certified. And then it would take boat owners 2 days or more to find a reliable or certified captain. And this is what leads to the fragmented booking process and underutilized boats, which creates frustration for customers and loss of revenue for owners. At Waterway World, our solution is simple. We offer 2 distinctive services. It's called Catch a Captain and Catch a Crew. Catch a Captain is that we connect passengers to certified captain plus boat, easy as a ride-sharing services. And for Catch the Crew, we connect boat owners to certified crew members and captains so that boat owners could go ahead and choose their captain on Catch the Crew, and that same captain will pilot their boat on Catch the Captain, which leads to an increase of profits for the boat owners and 95% increase in efficiency and safety for passengers. Our product is patent pending. Due to our AI voice booking, customers could book a boat without lifting a finger. Our AI comes in 4 different languages: English, Mandarin, French, and Spanish. We also have live navigation. So when the customer books their boat, the customer will get a direction to the captain's location. And then when they get 1,000 feet from the captain's location, they are able to see the boat at the dock in aerial view. And plus, our services is on demand. And our app is available in the Apple Store right now. The total addressable market is at $221 billion in the global market. This is expected to grow to $379.9 billion by 2031. The potential sum is at $6.65 billion. We want to capture 37.3 million within 5 years of our release. Our business model is a marketplace. We take about 20% of the total boat rental per transaction for the listing from the boat owners, and we charge passengers an 8% booking fee, plus a $10.99 service charge fee. Within 5 years, we predict our revenue to be $20 million. That equates to 53,700 trips per year. Our go-to-market strategy is that we want to offer passengers discounted on excursions, referral rewards for boat owners and captains, and ambassador and partnership programs for our boat owners and captains. And we also want to create a digital community events as well. WeAreNoCode is the only company that has an AI voice booking plus a patent pending technology. And we also do the vetting by doing a background check and checking credentials of the captains and crew members. Meet our team. We have 3 software developers, a marketing specialist, a product manager, and me as a sole founder, CTO, and CEO, and Army veteran. Meet our board of advisors. We have retired Lieutenant Commander Mark Cornwell with 35 years of experience in maritime operations and a U.S. Coast Guard veteran. And we have Matthew Squab, who has 40 years experience in operations, sales, and as well mentoring startup. And we also have Dana Klein that have 45 years in public relations and marketing experience. Our traction thus far is that we have 45 passengers ready to book an excursion, 10 captains clear, 45 waiting, and 2 pending partnerships. We're asking for $1.2 million per seat for a 15-month runway. Thank you.
Okay, thank you, Lamarco. Let's go to our next presentation. Our next startup is Framus. Framus bridges the gap between fans and celebrities by offering a scalable, immersive visual selfie experience out of Wilmington. They're a pre-seed stage company with a Peachscore of 719, score of grade A-. Sylvie D. Smith, founder and CEO.
Hi, I'm sure you have idols, and you want also take a selfie with these idols when you go to a concert or a sport game, just like me. I'm Sylvie, the founder of Framus. But what do we see when we arrive at the venue? We are not alone over there. All the fans want to have a selfie with their idol. And that's the problem today for celebrities. It's not possible to give all the fans what they want. The celebrities don't have the time for all the fans. And then we don't even talk about security or about the fans that are not in the possibility to be at the venue. What if there is a solution that gives celebrities the possibility to serve all their fans without limitations and create a revenue stream for these interactions? Well, it exists today, Framus. Today, Framus is in the app stores with the demo version of the selfie frames. But you ain't seen nothing yet. What if you can take an exclusive selfie because you are live at the concert? Or what about the idea to have a meet and greet from in your sofa at your home? Or have a weekly walk with David Beckham with VR technology? Or meet the other fans in the meta worlds? For all that, there is a huge demand today for personalization in fan engagement sector. But also the influencer market, advertising market is a huge growing market. And that's our target market. Why we are in the influencer advertising market? Because we are selling logo placements and brand exposure on the selfie frames that will be shared on the socials of the fans. Because of the shared revenue stream, celebrities are in the possibility to monetize their interactions and create new income streams without the limitations of traditional engagements like meet and greets or one-time videos. What about the idea to create a selfie frame with a shared revenue stream for a foundation. This model lets become us a billion-dollar company within 7 years. In our second year, we will execute the lessons and learns from coming with a new business model and to grow from the third year on. How are we going to reach these goals? Well, we will focus on partnerships, for example, Samsung to be pre-installed on all their devices. We will onboard high-profile celebrities. The first names are already there. They can attract massive fan engagement and brand partnerships. These brands can advertise on the selfie frames that will be shared on the socials of the fans. This turns every fan interaction into a brand touchpoint. And for the fans, we are a free app. And that makes us different than other platforms or apps. Not only that makes us different, but also the business model, the scalability. With a single engagement, the celebrities can scale their engagement across thousands or even millions of fans. That makes us different than, for example, Cameo, who is a one-time fan interaction. The blend of limitless scalability and customization make Framus a unique solution. The start of Framus was a selfie frame for a friend of mine during her concert. The selfie frames were live on a giant LED wall in the venue. That was our first pilot. Framus was born. With this team, we have the skills and the vision to build Framus into a leading platform for fan celebrity interaction. The expertise of technology, marketing, and sales, and the years in entertainment is the base to scale. For this scale, we are looking for 500K in pre-seed funding to accelerate our growth. This will allow us to expand our app, onboard high-profile celebrities, and change features and drive fan acquisition through marketing. With your investment, Framus can dominate this emerging market, creating limitless opportunities for fan celebrity engagements. It all starts with interactions and connections between people. So let's meet and spread the word in your network of celebrities, brands, and investors. I'm looking forward to set a meeting with you and explain you more about Framus. Thank you.
Okay, thank you, Sylvie. Our next presentation is from, I'm not sharing. There we go. Getaway Space. Spark the future of electric vehicle charging. We provide DC fast charging with a lounge. This is out of Los Angeles, California, pre-seed stage company. Peachscore of 639, grade B. Stephen Koo, founder and CEO.
Hi, Steve Koo, CEO and founder of Getaway Space. The problem in the United States today is that the electric vehicle charging infrastructure is very poor and lacking. There's a waiting line, no lounge, 27% of them are broken, no security on premise, no clean bathroom nearby. So a solution is to create Getaway Space Lounge. The customers would park their EVs outside and charge the EVs, and then come into our lounge space nearby within walking steps, use a restroom, free Wi-Fi, order coffee and drinks. And we plan to capture about $465 million, our service obtainable market. So during the next 10 years, we plan to build 70 locations. And by the 50 of operation, we plan to capture $150 million. And it's worthwhile noting that California has passed a legislation to stop selling gas-powered cars by 2035. This is our business model and financial projections. We plan to use revenue model of subscription, $150 per month. That includes 8 supercharges per month. As for value proposition, we have engaged ex-Tesla engineers to design and maintain our equipment. We also partnered with MTCode to provide charging application software, and it has reservation features, has also auto charge features. So even without app turned on, you can plug in and begin to charge based on MAC address of the automobile. Clean bathroom, of course, everybody loves clean bathroom. And through a partnership, meals are provided by Earth Cafe. They have a huge following for their organic coffee and meals in Los Angeles since 1989. We also have a 24/7 security on site. It's very important to make it safe to use and inviting place to be. Go to market. We plan to use online media advertisements, Google AdWords, Facebook, Instagram, and X. We also plan to use billboards on freeways because most of our customers will be driving by the freeways. And PlugShare app, of course, it's an app that everybody uses, and so we plan to be present and place ads on the PlugShare app. The competitive landscape is that there's Blink, EVgo, Mercedes-Benz, Electrify America, and Ford, and other manufacturers as well. They all build EV charging stations all across the United States. We are focused in Southern California. This would give us better capability to maintain the equipment with local support. Even Tesla is a major competitor, but they're all spread thin where we are focused in local area. But even still, it's worthwhile noting that there are 145,000 gas stations in the United States today. In contrast, for EV stations, there are only 10,000 built so far. So you see, there's still a long way to go. Our team comprised of myself. I have a bachelor's and master's degree in electrical engineering from the University of Southern California. I've worked for companies such as Samsung Electronics and K-Tech Telecom that builds broadcast electronics. Our co-founder, Daniel, is a seasoned graphic designer, and he's the one that came up with the look and feel of what Gateway Space should look like. He manages all art direction of the company. As for partnerships, we have a relationship with Qumeri to install EV charging equipment. We've also formed a partnership with Earth Cafe with our coffee and meals. And we're also poised to receive $1 million investment from Southern California Edison Company, a local electrical utility company. And we're seeking to raise $1 to $1.2 million on the Start Engine. Thank you. I'm Steve Koo. You can always reach out to me for any questions.
All right, thank you, Steve. Let's go to our next presenter. Lots of buttons to click. So we have WeAreNoCode, omnichannel AI-powered platform for small businesses, gamifying real-time connections, rewarding users, and boosting revenue and foot traffic out of Traverse City, United States. Pre-seed stage company with a Peachscore of 705, grade A-. Brad Sigworth is the founder and CEO. Okay. Video. Okay, here we go.
Hi, I'm Brett Sigworth, the founder of WeAreNoCode. We drive foot traffic in real time for small retail businesses across the globe. But we're really more than that. Really, we're about preserving culture and heritage. I want you to close your eyes for a second. Think about the best meal you had recently at a small retail business. For me and my family went to a local food truck and had burritos. And I was eating the burrito, and I looked over at my wife and I said, I think this is the best burrito I've ever had. She agreed. It dawned on me in that moment that this wasn't Taco Bell. This is a really unique experience. This was a family-owned, passed down 3 generations burrito stand that had been running for a long time. And I realized that they were passing on knowledge, culture, heritage, hundreds of years of recipes and generational knowledge. And trying this was a unique experience. It was a cultural experience. And WeAreNoCode supports those types of small retail businesses that really create unique opportunities. The problem we have right now is that these small retail businesses are struggling. We all see it. We go around main streets all over the country and we see local small businesses being replaced by national chains. The reasons are simple. Costs have gone up, rent, labor, COGS. Foot traffic's down and consumers are shifting toward online purchasing. It's really hard for small retail mom and pop shops to compete against national competitors. The solution is WeAreNoCode, an omni-channel SaaS platform that drives revenue and foot traffic in real time. We geofence our customers and we back it all up with AI. We know what they want, when they want it. We know that you're gluten-free and don't drink alcohol. And so we know exactly what offers to curate and push to you in real time to bring extra foot traffic into local businesses. The platform and the product is super simple. In under just a few clicks and under 2 minutes, you can post live to our interactive map, and consumers in that area are seeing different offers and opportunities in their marketplace. The market opportunity is huge. It's an $8 billion market. We expect it's going to be $43 billion by 2033. Our business model is simple. We're a SaaS company. We charge a monthly fee based on your revenue size and the size of your business. This allows micro or small startups to get involved and have this effective tool. And our goal is to always be affordable and drive foot traffic, so we gain them as customers for life. We project to be at 34 million in revenue by 2021. Our go-to-market's simple. We are already in the market, and what we do now is we highlight local businesses on Instagram, we feature them, then they reach out to us, they send us messages, and they ask, how can I get more involved? What more can you do for me? So to gain business customers has been really easy. Our marketplace is growing through word of mouth. People love using our product and keep telling their friends and family. We have a competitive landscape that's interesting. Groupon has historically been the major player, but they don't work with small retail businesses. The Nudge is a new competitor that has some interesting features and follows more of a TikTok social media model. None of them are a business-to-business product that the consumer owns, that the customer, that the small businesses have access to, and they choose when to post, how to post, what to post. None of them give them that tool, and nobody's connecting small retail businesses to the consumer in real time. The team is myself as the founder. I've had some successful exits. I have an AI technical advisor and a strategic advisor, and we're looking to continue to grow the team. We're not just talking about this. We have traction. We're in the marketplace. We have 900 end users. We've driven $4,600 in revenue, all through a simple text messaging portal. We've also won a TC Soup pitch competition. We were invited to pitch at eLab Ventures AI pitch competition. We've been accepted in the Peachscore's data-driven Accelerator, and we've been invited to repitch at Ann Arbor New Tech to continue to get follow-on investment. We're asking for 600 grand in the seed round and a 3 million valuation pre-money. Thank you so much for your time. When you think of WeAreNoCode, remember that we're about preserving culture, supporting mom and pop shops in your local neighborhood, and we're really excited to continue to share our message. Thanks so much.
Thank you, Brett. Okay. Let's go to our next presentation from Gophen Data Solutions, Inc., revolutionizing lending via data analytics out of Brambleton, United States. Company's a seed round stage with a score of 745, grade A-. Founder and CEO, Jiten Singhal.
Hi, my name is Jiten Singhal, and I'm the President and CEO of Gophen Data Solutions, Inc. Gophen is a data and analytics startup. We are digitally native and looking to disrupt certain loan markets, which we will cover in the presentation. Each year, more than 1 million agricultural and rural small businesses apply for about $70 billion in real estate loans. These loans are usually applied manually, with the loan officer talking to the borrower on the phone or in person. The entire process, from start to finish, is manual, and the total time to close a loan can take between 60 to 90 days. Government agencies such as USDA, SBAs, and GSEs are big players in the market. Gophen's solution to this problem is to create an all-in-one SaaS marketplace where borrowers can submit a single application that can be matched with multiple lenders 24/7. Gophen is my 5th startup where I've blended technology, especially AI, with my 20+ years of finance experience to cut underwriting time by 90%. While you may find that concept familiar and the name Lending Tree might come to your mind, which operates a similar model in the housing market, that model was actually created in the 2000s by Freddie Mac, and I was part of that team. Our product is an all-in-one SaaS marketplace. The product has been developed currently in beta testing with a few customers. Our alpha version was trained on 50+ loan applications sourced from my network. Underwriting an agriculture and rural small business loan is very time-consuming due to 140 different commodities involved. Additionally, lenders do not have a single software that can capture the nuances of the different loans and typically use some form of Excel. The customer benefits of our product are significant as well. We cover most commodities out of the box. Using our product, lenders can reduce overall loan closing time by 40% while working on the loan application 24/7. The revenue we earn is a percentage of annual loan volume passing through our system. We are forecasting a TAM of $1.4 billion on $70 billion loan volume, SAM of $800 million, and a SOM of $120 million, $8 billion loan volume. Cumulative 5-year revenue is projected to be $170 million. The market is growing 5 to 7%. We have both B2C and B2B components in our flexible business model. Over the last 24 months, we have fine-tuned the model to capture the revenue from one-time transactions, as well as generating recurring revenue from subscription-based services. Our financial projections reflect the pace of market penetration. We already have agreements in place with certain lenders to execute the loan business manually. The SaaS system allows us to digitize and grow exponentially, as you see in this chart. Our initial go-to-market was quite successful. We used my personal network to reach out to borrowers and lenders all over the US via multiple channels. To date, we have received over 50 applications. During this phase, we learned that the revenue on success model was not working. So we switched to a revenue on use business model. We are also working to hook up our system with government and GSEs to enhance system adoption by our customers. The competitive landscape is quite interesting. Most competitors offer a loan workflow product rather than a loan underwriting product, and some help with manual analytics. But all of them are very expensive. We offer a better, faster product for a fraction of the cost. Our current team is 9% strong. My background is 25+ years of finance and technology, and I previously managed $10 billion in loans and $4 billion in other investments. CoFin is my 5th startup. Nick, my co-founder, is the CTO and also very experienced. We have known each other for over 20 years. Our traction to date has been very important. I've contributed $120,000 cash from my pocket and raised $36,000 from external investors. We have built the manual lending business and now looking to go full digital. The MVP was completed in June and the beta version was released in August. Currently, we are doing an active POC with 2 to 3 customers and expect to go full GA in Q1 of 2025. We are raising $2.3 million in seed funding on a $15 million valuation. This gives us a runway of 24 months. We will spend the capital on product development, marketing and sales, and operations. Thank you. Again, my name is Jitin Singhal, and I'm happy to answer any questions that you may have.
All right. Thank you, Jitin. Okay, let's go to our next presenter. We have, there we go. eFraud Services empower government agencies and businesses to swiftly detect financial fraud with precise AI analytics of bank statements, regardless of the size. From Naples, United States, pre-seed stage company with a Peachscore of 676 and a grade of B+. Barbara Steinberg is the founder and CEO.
I'm Barbara Steinberg, co-founder and CEO of Peachscore Services. Financial fraud is an $11 trillion global problem. Financial fraud investigators review and analyze hundreds and often thousands of pages of bank statements for each case. If done manually, it can take weeks or months, sometimes years. It requires 100% accuracy. Due to an overload of cases, many never get investigated. resulting in billions of dollars of unrecovered funds lost to government, businesses, and individuals. While there are automated solutions available, they fall short on speed, accuracy, and affordability. eFraud has developed the fastest, most accurate, and affordable solution using advanced AI. One key feature of our app, eFraud Investigator, is that it can be accessed using any web browser, making it available for millions of users worldwide. In the US, there are still 5,000 banks, mostly local and regional, and each one has its own format. We have the only solution that can convert any statement from a PDF into Excel for analysis with 100% accuracy and produce results in minutes. The market opportunity ahead of us is immense. We took a bottom-up and top-down approach to TAM, and the results are the same. This is a $25 billion global market opportunity. There are few limitations in our market size other than geopolitical. Our customers come from every level of government, any size business, as well as accounting and legal professionals. Our beachhead market is the US. Based on a 10% penetration of 10% of the global market, we can reach $80 million in 5 years and break $100 million within 7 years. Our business model is based on usage. We charge 75 cents to 95 cents per paid process. We have 3 segments of users. 1, pay-as-you-go, professionals, small businesses, even divorcees. 2, monthly subscriptions for small and medium-sized government agencies and professional firms, including forensic accountants and lawyers. And finally, our annual prepay is for larger agencies and firms who prepay annually for an annual or multi-year commitment. We expect to generate $80 million within 5 years and break $100 million in 7 years. We estimate pay-as-you-go users to be 20% of customers in the early stages. We anticipate monthly subscriptions will make up 50% of our customer base. The remaining 30% will be annual prepay, and we expect this segment to grow over time. Our go-to-market strategy. Government employees love to attend conferences. We were in Las Vegas in June exhibiting at the ACFE Global Conference, the largest industry group with 90,000 members. The feedback on our product and business model was extraordinary. Our software development partner has a government contracting division in DC, and we will leverage their contacts and expertise. We know who our customers are, and they know us. The competitive landscape. For years, the solution has been template-based. No one has a corresponding template for every bank format. It is mostly hit or miss. The standard business model has been an annual license fee per user. This greatly limits the number of users who have access because of cost. With the latest advances in AI, we can offer an extremely high degree of accuracy, processing time in minutes, and an affordable platform for a broad market. Our core team consists of seasoned business leaders who have successfully founded startups and developed divisions within major national consulting firms. Our technical team is an outstanding group of skilled software engineers. I've personally been involved in bank statement analysis for over 15 years. In prior years, I sold similar software and services with sales of $641,000. In 2020, I could see that AI offered a much better solution than anything on the market. Since then, we have raised $185,000 from friends and family, in addition to bootstrapping. We have many existing customers testing our software. We're raising a seed round of $1 million. That, along with revenue, will give us at least a 24-month runway. We are interested in the safe, but we'll consider other instruments. The funds will be used for ongoing product development, 40%, operating expenses, 30%, sales and marketing, 20%, with a cash reserve of 10%. Thank you for your time. I welcome your questions.
Okay. Here we are. Well, last but not least, our 21st and final startup presentation. Let's go here. Okay, our next company and our final company is Culture, Ankara, Quanca Literature Group, where the old sources have been created anew. The company is out of Ankara, Turkey, and seed round stage company with a score of 756 and a grade of A on Peachscore. Founder and CEO, Gorkam Suleimangalu.
My name is Görkem Can Süleymanoğlu. Gorkam Ken Süleymanoğlu is the English pronunciation of my name. I'm so honored to be here. I'm an economist. I have two research papers. I created the Green Finance Equation in 2023. I am co-founder of Quanca Publishing LLC in Turkey. The old sources have created a new is our slogan. Problem 98% of ebook readers suffer from eye strain. A widespread and a serious problem is in here, which results in headaches, difficulty in concentrating, and various other issues. We defend, we own 15 robust medical aspects for the statistics and the medical diagnosis. I really like the all research papers. Solution: the software technology rather than any hardware will be able to run e-pages that are similar to the authentic look of a printed page, physical look of a printed page, a classical book page, while blocking eye strain, and it should be compatible with any device. Software technology, the software technology could be beneficial as far as the product, problem, subject is concerned. Product, Quanca Publishing LLC. We have created, coded an electronic page, e-page embedded in ebook software with all layers. We will learn the sunlight absorption principle. Namely, our page dynamically absorbs sunlight, natural light, or physical light, adjusting the white light balance on any device. Thus, we provide a realistic white tone, but I prefer the artistic white tone phrase on our page to block eye issues in every computer platform, PC, laptop, smartphone, and tablet. Market opportunity: North America and Turkey ebook product trade, TAM $5.4 billion, SAM $1.62 billion, from $162 million. Quanca Publishing LLC. We aim to reach 7% of $162 million in the next 5 years. Global trade data, again, for the ebook product trade, what we measured is on the right side. Business model B2C SaaS. Quanca will be a subscription-based ebook digital reading book platform that uses in-house technology and supplies a wide catalog of books. Our subscription options, triple, casual, variety, and book form properties are in here. 3 full books with casual plan, 6 full books with variety plan, 10 full books with book form plan. Book form will be my favorite one. There are mutual contracts and a number of books in the plans. During this time, half of the earnings from the specific plan will be shared to professional publishing houses, publishers, and royalties. Quite yearly net revenue service in $1 million. We are at the level of $80,000 in 2024, but we want to reach $320,000 at the end of 2025 or within the first 3 months of 2026. Of course, together with 10,000 users, by establishing a fully equipped network system and a server system in the next 4 months. Annual cost omitted from the graphical data 25% to 26%, lifetime value $40 annually. Go to market. We define 4 strategies as far as the subject is concerned. The first one, initial direct sales. The second one, AI automated CI. The third one, which is the most important tool for us, is product sessions, online systems with professional publishing houses, publishers, and the last phase is social media ads. Corporate VA company will be the absolute one. We have 4-dimensional competitive landscape. We maintain 4-dimensional competitive landscape. Low eye strain subscription, cross-platform, credited publishers only for availability for of the modern books. Quanca page, low eye strain check, subscription check, cross-platform check, credited publishers only check. Management. Görkem Süleymanoglu. It's me, co-founder and CEO. Batın Süleymanoglu, co-founder and CTO, associate in industrial design. He designed the 3 layers of the e-page. Medalist in painting at the young talent. Edna Kulunç, company public accountant. He's my colleague at the same time. As Squonk asked for $500,000 to make it possible to read books easily, accessibly, and healthily in all electronic environments. Pre-seed $500,000 save 20% discount. As you could see from the pie chart, our product is fully ready, and all we need is a strategy, partnership to go to the moon. Thank you for listening to me. Here's my LinkedIn QR code.
Amazing. All right, folks. This brings up to the close. We went long enough. I even had time for a wardrobe change. Thank you all so much. Thank you to our panelists and startup presenters, as well as to all of our global audience members. It was an amazing event. I really appreciate everyone's participation. If you're, let me actually share this slide so you can have our contact information. And there we go. Okay, now if you're by chance a corporate partner or investor interested in connecting with any of our presenters, please feel free to reach out to any of our team members. My contact information is being shared right now, both my direct email as well as my LinkedIn. Feel free to reach out. We're more than happy to make any introductions. In case you're an ecosystem partner looking to explore collaboration opportunities, love to hear from you. I love nothing more than strategic partnerships. And let's sit down and talk and explore synergy, see how well we can work together. And in case you're a founder and just saw how our graduating cohort members went through and you'd like to participate in our program, please visit our website, take a look, and we encourage you to apply to our program and submit an application. We do receive a large number of applications as well as inquiries, but we're always happy to connect and answer any more questions. Again, my name is Peyman Shamirzadi. I am part of the Peachscore team, and it's been a pleasure being your host today. Thank you all so much, and I wish you all a wonderful rest of your day and a wonderful holiday season coming up, and we'll see you next time. Thank you, everybody. Bye-bye.